Okay, we start. Okay. So, good morning, everyone. I assume you are here to learn about the stock market, right? And I understand that many young investors joined today. I strongly believe that you make the right choice to be here today. Probably introduced by your mom and dad. I hope that you're going to learn a lot about investment on your investment journey. And during the presentation, if you have any question at all, just ask because I want to make sure that you understand what I present today. And tell you the truth, I wish somebody taught me what I'm going to present today like 10 years ago. I would have been very rich. Then focus on day trade, which is the wrong thing to do, right? Anyway, so first of all, this is a disclaimer, okay? I'm not a financial advisor. So anything present today only for education purpose, okay? You make your own choice. You make your own decision on investment. So don't, if you lose, don't come back and sue me, okay? So everybody know Mr. Warren Buffett, right? And he had 6 rules of investment. And I hope today I will cover all the 6 topics that Mr. Warren Buffett used as the principle or guideline for him to do investment. Number one, cash is not good. Why is that? Because if you have $100 today, every year inflation about average about 3%, right? So your $100 cash in the bank will worth less. You only have 97%, $97 next year. And next year you have only $95. So by what he meant by that, if you put money in the bank, you won't make a lot of money. In fact, you lose money because your $100 today, you cannot buy the same thing you're gonna buy next year, right? Number two, investment in productive access. What does that mean? He have many tools to do that. He use intrinsic value, he do fundamental analysis, but what he meant by that is you have to invest in something that people use. For example, Tesla, right? Everybody drives Tesla car. Apple, everybody use iPhone. Some product that people continue to use from now until the next 10 years, right? Mr. Buffett, he invested Coca-Cola. Why? Because everybody drink Coca-Cola. You go to South Africa, China, everybody drink Coca-Cola. So that's what he meant, right? Something people use. Number three, stay in your circle of competence. What does that mean? That means if you are good at something, stick with it, right? If you're good at long-term investment, if you're good at day trade, if you're good at swing trade, you good at trading future, dollar, yen, whatever, right? If you're good at something, stick with it. Don't change it, right? Evaluate company, meaning you have to do theory fundamental analysis about the company before you make decision to invest. Play big and don't waste opportunity. What does that mean? He had a famous sentence: fear when people are greedy, be greedy when people are fear. Meaning when the market drop, don't be sad because when market drop like yesterday because of COVID in China, right? The new COVID in China at market, the Dow Jones dropped by 700 points. That's when you're gonna buy. That's the day you should be happy, not sad. Because what Buffett do, he's gonna buy the dip, and of course, dollar cost average, right? DCA style. But the average investor will scare and even cry when the market go down. I don't. I will be very happy yesterday. I buy more Tesla, right? And I suggest all my students to buy it. And I explain to you why it does not make any difference at what price you're gonna buy. Last but not uh, that I want to emphasize is that invest in yourself, which you are doing today. You invest on your knowledge. You have to have knowledge. You have to learn to invest. Nobody come to the stock market and know everything. Even me, I learned for the last 10 years. I still continue to learn, right? So let's assume that you want to have a $1 million by 6 years from now, 2030. The question is, would that be enough for you to retire, right? Maybe somebody need 3 million. Maybe somebody need 5 million. Who knows? But I'm just using 1 million example. So today you have to buy 400 share of Tesla. Cost you about 140,000, right? And assuming during the presentation, I will prove to you that by 2030, Tesla going to be $3,000 a share. That means you're going to have $1 million. The question is, would that be enough for you to retire? Well, you have to do the math, right? First of all, what your expense by 2030, will your house pay off? Yes or no? Because if not, you still have a house payment, right? But I'm assuming that you pay off the house because many people here are old, right? Except young people. Young people maybe have 50-year mortgage, or 30-year mortgage, right? Even though you pay the house off, you still have to pay property tax, house insurance, medical insurance, electric bill, gas bill, blah blah blah, right? So in US, they average out for a couple to live comfortably, you need 6,000 a month. Okay, so 6,000 a month account to 72,000 a year, right? Now, if you have $1 million, you divide by that. So the $1 million will last you only 14 years if you don't do anything, right? So what I suggest, if and only if 2030 Tesla go to $3,000 a share and you have $1 million, I would suggest you put $200, 200,000 in cash so that you can expand, go vacation, whatever, right? The 800,000 divided by half, 50% by QQQ and 50% by VOO, because this is an index that probably give you some money so you can survive more than 14 years. Understand me so far? But if you have 2 million, you want $2 million, then I suggest you to have 800 shares of Tesla. If you want $3 million, you have 1,200 shares. This is the only Tesla, right? You can invest in some other stock, right? But I'm just saying, if you only invest in Tesla, this is what's going to happen. So don't think that you have $1 million and you're done. No, you still have to invest, but you invest in something stable, something safe, which is QQQ and VOO. Okay. So for the young people, Tâm Hằng recommend me to show this, right? If you have a 10,000 credit card balance, right? And 80% interest, it's gonna take you 7 years to pay it off. If you have $20,000 on the credit card with 18% interest, again, it only take you 7 years to pay off, and every month you have to pay like $400, at least $400 to pay off in 7 years. So credit card is a bad thing to do, right? So why did I say to invest in VOO? Because VOO, according to Google, I Google out, right? And it said average VOO is about 10%. And I put the link here that you can do it yourself. You go to this link here. So assuming that you invest right now, today, right? Your mom and dad give you $5,000 and you invest in VOO. And assuming if Google is correct, you have 10% interest. Then 5 years later, also every month you have to invest $200. Every month you buy $200. Not much, right? Just buy $200 every month. Right? You get a paycheck, just take $200 by VOO. but your initial investment is 5,000. After 5 years, you're gonna have 23 grand. This is called the power of compound interest. Okay. Now QQQ even better. Depend on what year, right? Technology and life cycle. QQQ may be better than VO. Sometimes VO better than QQQ, right? But in average, Google said if you invest QQQ the last 10 years, you have 18% return every year. So again, your mom gonna give you, your dad gonna give you $5,000 today. You put in QQQ with 5 year, 18% interest. I mean the return on investment, and every month you have to put in more, $200 a month. 5 years later, you don't have 30 grand. And this I'm talking about only 5,000, right? If you invest initial investment more, you're gonna have more money, right? So there are a couple ways to get rich. One is compound interest. Two is stock split. And I will talk about stock split later. So let's concentrate about compound interest. Why many Vietnamese teacher, even American teacher, they misunderstood what Warren Buffett strategy because of the compound interest. They forgot about compound interest. So let's say you buy 400 share Tesla that cost you 140 grand today with the price of $350, right? If you buy 400 share Tesla, you have 100, you have to invest 140K, right? After 6 years, and with a rate of return of 35%. Is it true? Is something I make it up? No, it's real. So if you Google and you ask Google what's the average year return of Tesla the last 10 years, right? It said 42%. This is true. This is fact. No BS. Okay. So, but I'm not going to use 42%. I'm only use 35%. So if you put 400 share Tesla, 6 years later, 35% return investment, and every month, here's a key. Every month you have to buy $700 more. This is the reason why I tell my students, it doesn't matter what the top price is. Today, 250, buy $700. Next month it goes to 400, buy $700. Next month it goes to 1,000 a share, buy $700. Doesn't matter. Why? Because this gonna compound interest so that you're gonna have a $1 million 6 years from now. If at the rate 35, Tesla gonna give you 35% return on investment, you're gonna have $1 million. This is the most misunderstand Vietnamese teacher. They don't have a clue because they don't study Warren Buffett strategy. This is how he make money, compound interest. So very key, very important that every month you have to buy more Tesla. Not much. Every month $700, right? For young kid, maybe you cannot do that. Maybe $200. But for people that older have a job, $700 a month is nothing, right? Because you day trade also. My group, it day trade, and every day you can make 100, 200. Then a month you make $4,000, right? Every month have $22 trade, right? Then $4,000 you can buy more Tesla. By that, the $700 will go into the compound interest to help you to have $1 million. This is why it's very important that does not matter the top price. It does not matter. The Vietnamese teacher teach you wrong. They say, oh, wait until Tesla go to 200. Wait until Tesla go to 100. No, that BS. You just buy it and let the compound interest do the job for you. Understand? This is very important. Okay? So later on I will do the DCF model. There's another way to give you $1 million. But by itself, by doing this by itself, will give you $1 million. Unless Tesla go bankrupt, which less than likely, right? So if you Tâm Hăng and IQ, right? This is in Seattle, downtown Seattle, right? You look at all the yacht. These yacht here, probably 10 million, $20 million. How the hell do they have money to buy that? I bet you a ball for they are stockholder. They are long-term stockholder. That's how they make money. Okay? Not day trade, not TA. You learning TA, wasting your time. I repeat, you learn TA, wasting your time. You need to focus on long-term investment and let the compound interest work for you. Okay. So this is not true. 84% of the stock in America are the 10% richest people in America. So if you talk to the people richest in America, they own stock. This is a fact. You cannot argue with that. Okay. So the long-term investor, 20% of long-term investors are the richest American. You still want to do day trade? You still want to learn TA? No, wasting your time. Think about this. During my MBA, right? I learned the technique from Dr. Eliyahu Gorat. Think about what he's saying. The opportunity of saving money is limited. What does that mean? Let's say you make 2,000 a month. After car payment, house payment, whatever, right? You have $500 left, and you say in the bank. That's all you can do. That's the only thing you can do. The maximum you can save $500, but the opportunity of making more money is unlimited. So you have to change the paradigm shift. Don't try to save money. Try to make money. That's what Dr. Eliyahu Gorat meant. Okay. So today objective is focus on long-term investment. Day trade and swing trade. My students still doing that every day, right? But you need capital investment. Can at little at $1,000. You can start today. You don't need 100,000, right? You can invest $1,000 today, and every month you put in more. Let the compound interest work for you, right? And if you want a day trade, you need to do all kind of here. But I'm not going to focus on day trade today. So by no means that what I provide today is going to be enough. I want you to learn today and continue to learn. Okay. I recommend you start investment today. Like I said earlier, I wish somebody taught me this 10 years ago, right? I would have started, or even 20 years ago, right? I went the wrong way. I went the day trade way, and I lost a lot of money. Okay. But when I start invest long term, I make a lot of money. So I get it back. So if you want financial freedom in the near future for you and your family, you need to invest today. These are the topic. Don't let it scare you, but these are the topic you need to master if you want all of this. If you want long-term investment, you want day trade, you want swing trade, you have to learn all this, not just TA. You need the whole package in order to be successful in stock market. Okay. So today I'm going to talk about overview long term and then and do a case study on the Tesla, right? So the philosophy that I teach my student, it's this is the famous sentence by Lao Tzu, right? Give a man a fish, you will feed him only a day. But if you teach him how to fish, he will handle by himself for the rest of his life. What does that mean? You have to learn to do it yourself. I teach you the way. I'm not going to give you a fish. I give you a fishing pole, and you're going to go fish yourself. Many Vietnamese teachers fish for you. That's the wrong thing to do. Okay. So for the new people, you need to go to read the rule. You need to go to new all the Discord. There are many things that you can learn. Okay. You go to a room study. There are many things here in the room study called Phòng học, right? And earning calendar. We provide everything in the Discord. When you if you do day trade, you go to trading chat and so on and so forth. Okay. So what is stock? When you buy a stock, that means you own percentage of the company. Let's say you buy 10 shares of Tesla, right? That means you own company. It's very important because later on, why is this important, right? So in other words, let's say if somebody have a phở restaurant, right? And you want to invest, you say, hey, can I buy 10% of your phở? Let's say the phở costs $200,000 and you put in $20,000, you want to own 10% of it. That's what it meant. Same thing here. When you buy the stock, you own that company, but just a small, right? Like Elon, he had a 18% share of Tesla, so he owned 18% of Tesla. For us, Mickey Mouse, right? We are bottom guy, right? We just a little bit, but you still own. Even though you buy 10 share, you still own 7% of a Tesla, right? Stock is not a play to get rich fast. This is another misconception that many beginner, Vietnamese beginner, they want to get rich fast. No, you can't. That's the wrong thing to do. If you think like that, you're going to lose your shirt. Stock is not a play to get rich fast. You have to be patient. You have to buy and hold. Okay, day trade is just for make 100 here, couple hundred there. That's not important. The important is long-term investment, right? When you enter the stock market, you have to accept risk. Never know what happened. Maybe alien gonna come down to Earth and kidnap Elon. He disappeared. Then Tesla gonna go downhill, right? Never know, right? Things can happen. So you have to accept the risk. Don't think that you enter the stock market without risk. There's risk, but you have to minimize it, right? And you need to invest in the money that you don't need right now. So you don't use your car payment money, your house payment money, your student loan to invest in stock. No, you invest the money that you don't need it right now, right? So that you can hold it. Otherwise, you're gonna sell it because you need the money. You sell it. That's the wrong thing to do. Okay. Do not borrow money. Don't go get a loan. Don't get margin. Use the money that you have. Okay. So why do the stock go up and down, right? So let's say the K up here, right? Somebody want to buy 100 share at $50, right? And somebody want to sell 1,000 share. So the more share sell than the buyer, the stock going to go up. On the other hand, if you want to buy 1,000 share but only 100 shares sell, that means the buyer more than the seller, stock going to go down. Okay, I mean go up. So what broker do you have to use, right? There are many brokers: Fidelity, Charles Schwab, Webull, Robinhood. If you want to buy crypto, Coinbase, Fidelity, um, Robinhood, blah blah blah, right? So you can choose which broker you wanna exercise, right? But let me tell you something. If you have 400 shares of Tesla, or maybe 10 Ethereum, one Ethereum now is $3,000, right? 10 Ethereum is about $30,000, and you have 400 shares Tesla about 140 grand, right? So you may think, oh, that's not a lot of money, right? But think again, what happened if Tesla go to $3,000 a share in 2030? That means you have $1 million. The question is, do you want to put $1 million on Robinhood? Hell no, because that's a small company. You want to put $1 million in the broker that you can trust, the big one, like Fidelity or Charles Schwab. Don't fool around with Robinhood, because Robinhood can go bankruptcy anytime. Fidelity, no way. If Fidelity bankrupt, this country economy gonna go downhill. It's not gonna happen. Fidelity and Charles Schwab gonna be the last standing, right? So you want to pick the broker that you want to have $1 million. You want to hold in that broker. You understand what I'm talking about? You don't want $1 million on Robinhood. No. Bitcoin, the same thing. What happened if you have $30,000 Ethereum, but in the future Ethereum go crazy, right? And you have $1 million. You want to put $1 million in Robinhood? No. It can go bankruptcy anytime. Then you can lose everything you have, right? So again, you pick the broker that can survive, and the big one. You don't want to put in the small little guy, right? So in Fidelity, earlier I said you have to have one account for long term, one account for day trade if you're doing day trade, right? And if you hold more than a year, you pay capital gain tax less. If you sell within a year, you're going to have to pay more capital gain tax. So that's why long-term investment, you need to hold it. So how do I do account? So there are two type of account: cash account and margin account. Cash account, you can put in $100 to whatever you want, no limit, right? Then you only do long term or day trade based on cash that you have, or you can apply a margin account, which I recommend it, but don't abuse it, right? You only use margin as needed. So according to SEC rule, not the broker rule, but United States law, that you must have more than $25,000 in order to apply for margin account. If you don't have a $25,000, you cannot qualify in margin account. So if you want margin, you have to have more than 25, right? So let's say you have $30,000 in your account and you apply margin, your buying power maybe 60 grand. They give you $30,000 more. That $30,000 margin. So let's say on Friday, Tesla go downhill, right? It dropped $12 a share. And if you want to gamble, you want to buy it and you don't have money, at that time, you can use $30,000 margin to buy. And next week, sell right away. Don't hold too long because you're going to have margin call if the Tesla go down further. Okay? You only use it needed. So there are three types of buy and sell. You do a market order, meaning when you buy Tesla, you put in market order whatever the price at the time. The broker will execute it and it sell it to you. Or you can limit order, meaning you want to buy a certain price. Let's say Tesla at 350 and say, oh, I don't want to buy 350. I want to buy 345. You can set the limit to 345. Whenever the stock hits 345, it will execute. That's called limit order. Stop loss means after you buy $350 a share and you said, if it go down to 345, I'm going to sell it. Then you can set a stop loss $5 less, right? 345. So that's called set stop loss, right? This is very frequent activity that day trader do. For long-term investment, you don't have to worry about it. So the two types of account, the taxable and retirement account. For young people, you don't have to worry about it. You have a long way to go, right? But for older people, they have IRA, they have traditional 401k, whatever, right? It's in the retirement account. These are non-taxable, meaning as long as the money in the account, you buy or sell, you don't pay tax. Only pay tax when you withdraw. So you have advantage. People that have retirement account, they have advantage. For taxable account means cash. You put in $30,000, you have to pay tax when you have a profit, right? These people, they don't. They only pay tax when they withdraw, right? So there's two type of account. I suggest that you use your iPhone. If you want to use TradingView, ChatGPT, or Discord, you can install on your iPhone, right? So the four type of people. One is conservative, meaning they don't want to do anything. They just want to buy something stable, safe, right? Investor, they take some risk. They buy Tesla, NVIDIA, right? Trader, like us, like we trade every day. Speculator, mean gamble. Who are they? People using TA, people using um, trade option. These are speculators. They're gonna lose your shirt. They're gonna lose their shirt. I guarantee it. I've been there. Okay, so don't trade option. Don't trust TA too much. You're gonna lose. Okay, I would like you to be a D2, only investor and trader. So I suggest that if you do day trade, you need to invest long term 80% of your account. You only put out 20% to do day trade. And if you want to invest in long term, in our group, we have five turtle. We call five turtle, right? NVIDIA, Tesla, Apple, TSM, and Boeing, right? These are the five big cap. What is big cap? Meaning market cap more than $100 billion. You don't want to buy a little guy, okay? Because the more capital market cap, the safer, less risk. It doesn't mean no risk, but less risk. For example, Apple market cap right now is $3 trillion. You think it'll go bankrupt? I don't think so, right? So Day trade, you use 20% to day trade, and you need the computer, you need monitor, blah blah blah. But I'm not focused on day trade today, right? So, what is Wall Street? A lot of people don't understand. Oh, Wall Street is New York Stock Exchange. No, Wall Street have many things. One, a broker, Fidelity, Charles Schwab, right? Second, a bank institution we call shark, come up, right? We call shark or whale. These are big boy, right? Like BlackRock, JP Morgan, Morgan Stanley, right? Bank America, Key Bank. These are institutions. They are part of the Wall Street. Commercial bank, Bank America, they are institution, they also bank. They're two types. They are investing banking and they also consumer banking, right? J Bank, same thing, right? Number four, hedge fund. These guys, the number two and number three, usually they buy share, buy low, sell high. They want to stock go up. The hedge fund, majority of hedge fund, they want to short stock. They want to stock go down. Okay, hedge fund, they like to short stock, and I don't recommend it. I will explain later, right? Insurance company, to protect these guys, they are part of Wall Street. Mortgage lender like Rocket Mortgage, blah blah blah, right? They also part of the Wall Street. They all work together as a team. New York Stock Exchange, Wall Street, and last is us. They call retail trader. And Wall Street, they call retail trader a dumb money. They call institution smart money. Okay, and we in our group we have an indicator smart money. You don't have to worry about that. But when you heard CNBC or Bloomberg says smart money, they referring to institution. Dumb money is us because we are dumb, right? We're not smart compared to them. That's what it meant. So there are three index. Index is consists of many stock, right? They put in the index, and I will explain later what does it take to get into the index. So the first one is SP 500 Standard and Poor, right? And it take a simple. You can go into Yahoo Finance or Google Finance. You put in SPX or ES1 in the mini spy. Standard and Poor consists of 500 company biggest in the United States. For example, Boeing, right? Apple, Tesla, right? 500 company, and it weighted by market cap. So the more market cap, like number one right now is who? Nvidia and Apple, because they're $3 trillion market cap, right? So they on the top rank. What people look at the S&P 500 is the overall health of the U.S. economy. So if you see S&P 500 go up today, that means economic go well. If you see 500 go down, that means economic go down. So it's a measure of U.S. economy. Dow Jones, Dow Jones, only 30 company can go in here, and these are the best company that U.S. want to protect. If a company that in the Dow Jones, there's no way it's going to be bankrupt, because before they select a company into the Dow, it has to be very good. It has to be something that the government needed to. For example, Boeing. Boeing is in the Dow, right? So if you pick a company that in the Dow, you on the safe side, right? Because it's not going to go bankrupt. Because the selection process is very, very thorough. They're not going to select Mickey Mouse company into the Dow, right? And it weighted by price. So the stock price can go up, it's going to be on top of the list. So that SP 500 weighted by market cap, the Dow weighted by the price. Okay, so if price go up, the Dow go up. If the market cap go up, SP 500 go up. For example, why the SP 500 at all-time high? Maybe President Trump said it's because of me. Maybe President Biden because of me. No, it's not true. Because NVDA. The NVDA and because the reason SP 500 go up, because NVDA market cap go up the roof. If you look at NVDA a year, 2 years ago, maybe only a $1 trillion. It's 3x now. It's $3 trillion. So the more market cap go up, the SP 500 got nothing to do with president or economy, right? Because artificial intelligence make the AI go up, right? And NVA go up. Last but not least is the Nasdaq index. It filed in 1971. The Dow in 1896, long time ago, right? Nasdaq filed in 1971 when the computer start to the consumer, so people can trade online. Before 1971, if you want to buy Boeing, you have to call. You have to call the broker. Say, hey, I want to buy 100 shares of BA. Then the broker will execute for you by phone. After 1971, you can do it online, and that's when Nasdaq were established. Okay, and the symbol is NIX or NDX, mini Nasdaq, right? And it all the technology company will be in the Nasdaq, like uh, NVIDIA, Tesla, Apple, Amazon. They're in the Nasdaq composite. Okay, NYSE, don't confuse index and the stock exchange. There is three stock exchange: New York Stock Exchange, Nasdaq Stock Exchange, not Nasdaq Index. Okay, Nasdaq Index and Nasdaq Stock Exchange are different. Nasdaq Stock Exchange and the over the counter. The three type. Okay. So IPO.
So,
Yeah.
sorry to interfere. So for each topic, could you pause a few seconds for question and answer? Because there was lots of material that you just have gone through and
Okay.
lots of
Okay. Good
material for
idea.
them to swallow.
Okay. Good idea. Anybody have any question so far? Don't be shy. I want you to ask so you can understand. If you have any question at all, ask. I give you a few minutes. Anybody have any questions so far? Okay, no question, so we continue. So IPO, what's the IPO? It's called initial public offering, right? So let's say Tesla. Tesla, they IPO 2010. So Elon and board of director will, at the time they're going to be private company, right? And they say, okay, we want to go public. So we want to list in the New York Stock Exchange or Nasdaq, right? So they have to have financial sheet. They have to prove financial. They are good. They're gonna go. They do good product. The product that people using, blah blah blah, right? So SEC, Security Exchange Commission, they will oversight all the stock market, right? They will review that application. Say, okay, that's like okay, they good, all right. So now they have to find an underwriter. What's the underwriter is a bank, right? So the bank to protect them. So I believe Tesla go with JP Morgan. So they're gonna go to JP Morgan and say, hey, can you sponsor me? Okay, I have a goal of IPO at $25 a share, right? And I want to um, get about 500 million, right? After I IPO, you take the price multiply by outstanding share, you're gonna have a market cap, right? So JP Morgan gonna say, hell no, you design something nobody care. I'm not gonna sponsor you. Or say, oh yeah, oh Elon doing EV, that's good. So JP Morgan will be an underwriter, right? And together, JP Morgan, Tesla, and SEC will work together to determine the price. If Elon said, oh, I want to IPO $50, SEC after the review say, hell no, no, you're not gonna your company not worth 25, and Elon said 30, JP Morgan 35. After negotiate, they say okay, $30 share, right? Then they're gonna be IPO, okay. And the next question the SEC gonna ask, how many share do you have right now? I mean, you want, and Elon very smart, right? So he said, okay, I want 1 billion share, right? Or 500 million shares, something like that. But he need 500 million share, but he gonna ask like one and a half. So he gonna tell SEC and JP Morgan that I will IPO 500 million share, but I want 1.5 million. Why he do that? Because he planned to split, and I will explain later. Okay, so now they have 500 million share at $30 price. They're gonna go IPO. So these are the list of the company IPO. If you buy Coca-Cola, they IPO 1990, Boeing 1962, Apple IPO in 80, Microsoft 86, blah blah blah, right? So the first one in 1919, Coca-Cola, a long time before I was born, right? And the latest is Plantier, Coinbase 2020, Tesla 10, NBA, where NBA 1999, TSM 1997. Okay, just to give you a rough idea. So, what the hell is stock market, right? So, if you look on the left hand side, 90% are Wall Street here, all the shark, investment, stock exchange, pension fund, hedge fund, smart money, right? They all here. So your 401k maybe or pension may be managed by Fidelity or Charles Schwab, right? And they use high frequency trading, and I will talk about that a little bit later. So these are 90% of stock market. The rest are like Robinhood, right? They sometimes they make money when we buy and sell, right? They make some money. Robinhood, Fidelity, trader, educator, which is a teacher like me or Vietnamese teacher or whoever teach the stock market, right? And then the retail broker. I mean retail trader. This is us right here. So these people they short stock. The teacher short stock. Robinhood they short stock too. And these guys they all short stock. So I'm not worried about people trading option because it's making my money. But I'm worried about people short stock because they short like million share, 100 million of share, right? And what is COI? COI means conflict of interest. What does this mean? It meant these people can lie to you. These people can scam you. A lot of you see advertise in YouTube, hey, pay me $200. I show you something that you're gonna make million. They are scam. So these people conflict of interest. The Robinhood also a conflict of interest because they work with the bank, they work with the Wall Street, they're making money. Not that they cheat, but they're making money. For example, if you do a market order, let's say a stock is $10, right? And Robinhood and Fidelity don't charge fee when you make a transaction. But if the stock is $10, you do a market order, but when you execute it, it's 10.05, right? You want to buy $10 at the price at $10, but when it's executed, you look at your statement, it show you at 10.05. So these guys profit 5 cents. Can you imagine every day million share? They make a lot of money. So that's why they allow us to change to make transaction for free, right? They don't charge the money, but they're making money by the every time you buy, they can make 2 cents, 1 cent, 3 cents, 5 cents, right? That's how they make money. This picture, just to tell you that we are just a small potato. These guys are the concern. They can move stock up and down in 90% of Wall Street on the left hand side. We are nothing. Okay? What are you gonna buy? 1,000 shares Tesla? Who cares? Right? These guys they buy like 110 million of shares. Okay? So in order to understand the stock, you have to go to Yahoo Finance, right? If you type in the ticker TSLA, you go to Yahoo Finance, you type in TSLA, and you put here news, chart, community, statistic, profile, blah blah blah, right? So you put in you put in statistic, it's going to show you a lot of data, right? But these are the fundamental. First, you look at the market cap. This picture is old, okay? I think market cap for Tesla right now is about more than $200. So this is a market cap. PE, price earning ratio. The low, the better. The higher, not good. If PE like 200, 500, it's not a good company. Okay. EPS, earning per share. They tell you last year how much Tesla make money. Every share they make $3.90. Okay. Day range, 52-week range, high low volume. Every day they how much volume they buy and sell. Average volume, that means average about 96 million, but that day they trade 155. These are numbers you need to get familiar when you learn and study the stock. You have to understand all this. Okay. When you punch in statistics, you get more information. For example, do you want to buy a tiệm phở? Somebody sell you a tiệm phở $200,000, and you look at their financial statement, they don't make money. Last year they lost money. You want to buy that tipa? No, right? Same thing here. You look at the company profit margin 14%. That's it good. Why is it good? Because it's above inflation, right? If the inflation, the current how much current, I think 5%, right? But average U.S. inflation about 3%, but right now 5%. If the profit margin 5%, they don't make any money at all, right? So you have to look at the profit margin more than the inflation rate, which is good, right? It's 14% is good. Operating margin, that means after all the expense, things like that, 5%. Revenue last year, Tesla make $94 billion, which is good. They're making money, right? If you look at Lucid, you look at Riven, they're all negative. They don't make money at all. You don't want to buy that company, right? Um, Total cash, very important. How much cash do you have? How much debt do you have, right? So you look at Tesla. Again, this picture, oh, I think today is about 30 billion. So Tesla have $36 billion cash, debt 9 billion. That means they have more cash than debt, which is good. You don't want to buy a company that have 26 billion in cash, but debt 100 billion. No, you don't want. They owe too much money to the bank, right? So the more cash, more than debt is a good company. And um, book per share value 2019. This is the measurement that Warren Buffett he every time he look at the company, this is the first number he look at it. Have to be a lot, like more than 17%. Tesla 20%, which is very good. Okay. Outstanding share. Right now, Tesla have 3.19 billion share. Okay. And implied 10 share, float share is 2.77. So what the hell is that? What's the difference? The outstanding share is the total share that Tesla have. The float share is the share that we can trade. So the difference is how much? About 400 million share, right? You take 319 minus 270, about 400 million share. So that 400 million share belong to Tesla, untouchable. We cannot trade that. We only trade 2.77. Again, we can only trade a float. We cannot trade outstanding share. Okay, outstanding share, total share. So what Tesla do with 400 million share? They give to bonus. They give to executive, like they give to Elon. They have, okay, Elon, if you do good job, board director are going to give you 20 million share. So they take 400 million share, give it to Elon from there, not from the float. So you have to understand the difference. Outstanding share and float share, right? And the number very important, held by insider, 12%. Usually more than 8% is good. What does that mean? That means the bank, BlackRock, JP Morgan, or the big boy, right? Morgan Stanley, they buy Tesla. That institution, I mean. The insider mean like Elon, executive. Percent held by institution like JP Morgan, BlackRock, the more the better. Okay, that means if the company no good, the bank not gonna buy it. So for this number, more than 20% is good. If less than 20%, that means the bank not interested. If you look at Lucid, you look at Riven, this number is very small. So you look at Tesla, out of the float share, 2.7, let's make it even so I can easily calculate, right? Let's say 3 billion. 46%, that means almost 1.5 billion share owned by the bank. That means Tesla is a good company. Otherwise, the bank not gonna buy it. Okay, understand? Any questions so far? These number we call fundamental analysis, meaning you look at these numbers to evaluate the company is good or bad, right? So the number, let's say, profit margin 5%. No, you don't want to touch that company, right? PE ratio 200. No, you don't want that, right? Cash more less than debt. You don't want that either. Percent institution hold 10%. No, right? Because if the bank not interested, why the hell you want to buy that stock? Unless you gamble. Okay. So now the three types of index fund, mutual fund, or ETF, right? Exchange trade ETF, exchange trade fund. So there are three types that you want to invest. If you don't want, oh, I don't want to take risk, I don't want to buy stock, I want to buy something stable. So these are three types. First is mutual fund. What is mutual fund? Mutual fund is something that managed by the bank. If you go buy mutual fund with Fidelity or Charles Schwab, they manage it for you. Okay, like they manage 401k in your phone, your company 401k. They may buy Tesla or Nvidia within that fund, right? But it managed with a fee. Okay, index fund is no minimum. Mutual fund, you have, if you want to buy mutual fund, depend on the broker, right? Some brokers said you have to buy minimum $5,000 or minimum $10,000. They have a minimum requirement. Index fund, no requirement. You can buy $1 if you wanted to, right? And you can buy or sell only one time a day. If you buy the index fund, you cannot buy and sell multiple times during the day, right? Only one time. And there's a expense ratio. If you look at Yahoo Finance, if you go into look at these index fund here that I recommend, there's expense ratio. What's the expense ratio? Expense ratio is you have to pay the fee, usually like 0.05%, some 0.02%. So if you buy index fund, you have to pay the fee. Okay, ETF, exchange traded fund, right? It's no minimum requirement also, but you can buy and sell many times a day. Which our group they trade we trade X for XL, we trade SPY, we QQQ. You can trade, you can buy many times during the day, right? Index fund only one time a day. So the index fund start with an F that belong to Fidelity. With a V, that's a Vanguard. With the S, that's Charles Schwab. So if you look at the symbol, you start with the F, you know it's a belong to Fidelity. They they make the fund for Fidelity, right? But you can buy if you want, but it belongs to Fidelity. SPY, QQQ, and so on, also a good thing to do, but it's the ETF. So depend on which you want. You don't want headache. Say I don't want to manage it. Let the bank manage it. So you have $10,000. You can tell the broker, hey, I want to buy mutual fund, and they manage for you with a fee, of course. But if you want, sometimes you want to sell, you want to buy, then you have to buy index fund and ETF. So again, there are three types. Each of them are different. Okay. So here's what I recommend. VT Vanguard VTSAX. These are the index and mutual fund that I recommend is good. I've been studying them. If you want to buy them, then you can buy these, right? And of course, you can do your own research. If you look at here, VTSA yearly return 22%, SW 22. Usually, maybe the last few years a little bit less, but usually about 18 to 20% return investment. Expense ratio, if you want to buy this guy, you have to pay 0.04%. This guy, 0.03%. This guy, no fee. So depend on the investment, you have to look at the expense ratio. Then you know that you have to pay the fee or not. Okay. So look at Vanguard. The symbol is VOO. If you look at 1 year, okay, you go to Google Finance, you put in the symbol, you see this chart, right? And you can choose 1 day, 5 day, 1 month, 6 months, or 1 year or 5 year. If you click 1 year and you hold you the mouse here, and I will show you later. You hold the mouse here and you go all the way from the bottom to the top. So the last year, VOO give you 22% return. So if you don't want headache and you trust that next year VOO will perform 22%, then you just buy VOO. You don't want day trade, you don't want headache, you don't want risk Tesla or NBA, you can buy VOO. Okay. SPY, same thing, 22%. The last 12 months, it returned 22%. Then if you have $1 million, right? If you look at your under your bed, you found $1 million, you can buy SPY and you have 20% every year. Some year less, like some year 10, some year 40, but average about 20%. Okay. Look at this. The SP 500 statistics since 1950. 10% correction, only 1 or 2 years. Bear market, 6 years. So 1955 until today, that's 75 years, right? If you minus 20, 25, so from 1955 today is 75 years. But only 1 or 2 year market have a correction. Only 6 year in the bear market. Bear market, I will explain later on what a bear market is. Okay, and it recover about 3 6 months. It will recover. Bear market sometimes take a year or two to recover. Like COVID, we enter the bear market in COVID. It take about a year to recover. Okay, so correction. What does it correction mean? When the SP 500 drop more than 10%, it's called correction. If the SP 500 drop more than 20%, we are enter the bear market. Okay, so the average day trader only 3%. The long-term investor 10%. That's average. Okay, so if you buy in whole, you win. If you trade day trader, your probability of losing is very high, unless you know what you're doing. Which our group, right? We day trade making $100, $200 every day, right? You have to have a technique. You have to have a tool. You have to understand the market, blah blah blah, right? But long-term investment, you will beat any day trader. So you look at SP 500 win rate. If you trade uh, SP 500 every day, the win rate is 54%, which is not good. But annually, you buy and hold annually, 73%. If you buy SP 500 for 10 years, your win rate is 94%. Don't you want something 94%? Or you want 54%? You guys understand me? Any questions so far? No question?
I think, okay, this is your homework. You can look into rules of 72. It's just Google it and search for rule 72. This is about rate of return, so you can understand the compound that do favor for you in the long term.
Yeah. Okay. So the three types of stock. One is the big cap. What I mean by big cap? That means the market cap that I showed you earlier have to be over $100 billion to have less risk. The bigger the company, the less risk. The medium cap, it from 10 billion to 100 billion, right? Like Plenty, well, Plenty more $100 billion now. Like Cavana, right? They Cavana probably $30 billion company. So the medium cap. Small cap is any company that have market cap less than $10 billion is small cap. You don't want to invest long term on these because they can go bankrupt anytime, right? So you want to invest long term, you buy a big cap. That's it. No but, no if about it. So a lot of people ask me, "Oh, Mr. Two, can I invest long term in Lucid?" No. Lucid is small cap. Lucid market cap is less than $10 billion. It have a lot of risk. Now, it doesn't mean that Lucid will not grow and become $100 billion in the future, right? Yes, there's a small chance, but you want to take that risk or not? That's up to you. You want something safe, you need to invest in $100 billion company like Boeing, Tesla, Nvidia, AMD, right? Amazon, Google, Microsoft, right? You don't want to invest in little guy because a lot of risk. There's many company go bankrupt. So stock split. What does it mean by stock split? So the stock split, for example, Tesla have $3 billion, 3 billion outstanding share. If Tesla want to do a 1 to 3 stock split, they must have 3 times as much, right? Right now they only have. If you look at Yahoo Finance, they only have 3 billion shares. They want to do it 1 to 3, they have to have 9 billion shares. So where the hell the 6 billion share come from? They have to apply. They have to apply to SEC. They have to show financial statement. They have to say, hey, company Tesla going. We're going to do robo. We're going to do robo taxi, blah, 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 FSD, right? So the SEC will approve, okay, you good. So I approve it. then they will give Tesla 6 billion more. When that happens, then Tesla can split 1 to 3, right? Now, the board of directors have to approve. They have to send the letter to shareholder. Shareholder have to vote yes or no, right? Of course, they vote yes, right? No shareholder that vote no on split, right? But that's a process. They have to get approved from board of directors, shareholder, and apply the SEC for 6 billion share. Then when they approve, so if one share of Tesla is 350, and let's say they shift 1 to 5, then the price will be 5 times less. So you take 355, you divide by 5, that's 70. But instead of having one share, after 1 to 5 split, you have 5 shares. So you take 1 multiplied by 350, you have 350. If you take 5 multiplied by 70, you still have 350. There's no difference. The only difference is you have more shares and the price less. And I will explain later why they want to do that. Okay. Reverse stock split. What the hell is that? Right? So, in order for a stock to be listed in the New York Stock Exchange or NASDAQ, the requirement of SEC that the stock price have to be above $5. So a lot of company doing not too well, the stock going down from $3, right? So when the stock price below $5, SEC will send a letter to the company and give them a warning. Say, hey, you have to do something. Either you're gonna have to do better, you have more revenue, more profit, your company grow, your stock price go up, or I'm gonna delist you. So they will give the time, like maybe 6 months or a year, and it depends on the rule, right? It depends on the situation. So let's say the SEC say, I give you 1 year. If your stock price not gonna go up by $5, I'm gonna delist you, put you down to over the counter, OTC. So many companies being kicked out from NASDAQ and go back to OTC because they don't meet SEC requirement. Okay, so the one way to solve it, right, is to reverse stock split. What does that mean? So if the stock you have 10 share of $2, right, which you don't meet requirement, right? The top price $2 a share, you don't meet the SEC requirement. So if the company do a reverse stock split 1 to 10, it opposite to the stock split, meaning you have 10 share of $2, but now you only have 1 share of $20. You divide by the share and you multiply by the price. So now 1 multiplied by 20 still 20. 10 multiplied by 2 still 20. But the only difference is now instead of 10 shares, you have only 1. Instead of $2, you have $20 share. So they will meet the requirement for SEC. So the main reason that the company doing reverse stock split is to satisfy the SEC requirement, but it implies that that company is not doing too well. So when you hear a company have a reverse stock split, stay away from it. You day trade okay, but you don't want to touch it because reverse stock split is not a good sign. Okay, but if you see the company split like NVIDIA, Tesla, yes, because when they split, because the company doing so well, they will split. When company doing so bad, they will do reverse stock split. Understand me? Very important. The different. Okay. So again, I mentioned earlier, if the stock fall 1% to 10%, the Wall Street call the market pullback. More than 10%, but less than 20%, that means market correction. So a lot of people, including Vietnamese teachers, oh, market in the correction. The index only for 5%. What are you talking about?
Sư phụ cho em hỏi này sư phụ.
Yeah.
Cái 10% với 20% đó là một ngày hay là từ cái all time high ra sư phụ?
Từ all time high. Từ all time high chứ không phải một ngày. Sư phụ có một cái chart, explain later. So when all, what do they mean by bear and bull market? So when all three index, NASDAQ, S&P 500 Dow, fall more than 20% from the highest point, more than 20%, it enter the bear market. If the index raise more than 20% from the lowest point, we enter the bull market, which we are right now. We are in the bull market. Okay. If the three index fell more than 30%, that means the market crash. So a lot of Vietnamese teacher on YouTube say, "Oh, market crash. What are you talking about? The index only dropped 5%. What do you mean by crash?" Either they don't understand or they're lying to you. Okay. By definition, you only say the market crash when it dropped more than 30%. You have to understand the terminology that when you listen to CNBC, Bloomberg, they said, "Oh, market correction." Okay, you know what I mean. That means the index dropped more than 10%. Or Bloomberg said, "Oh, we are enter the bear market." That means it dropped more than 20%. By definition, not something that I make it up. By definition, okay. Here, bear market. Why do they want to call bear market? If you look at the feet, the nail, the feet nail always go down, and the fingernail always go down, right? So they use bear, the bear animal as a bear market, right? Go down. Bull, why the bull? Because the horn always swing upward. So they use the simple bull to signify the bull market. Okay, the bull market again, right, more than 20%. So let me show you here. So if you look at the stock, the Nasdaq, I don't know what here, October 2021, it's high, right? So from this point, go down to this point, which is about the end of 23, it dropped 33%. Meaning during this time, we enter the bear market. So from the highest to lowest, more than 20%, we are enter the bear market. Okay. On the other hand, Nasdaq, if you look at May 24 until now, the lowest point to today, the Nasdaq up 31%. Many Vietnamese teachers said, "Oh, we are in the bull market." What are you talking about? We currently are in the bull market. By definition, we are not bear here. So either they lying to you or they want to short stop. They give a bad, the wrong news, so you can sell stuff. No, we're not bull market and bear market. We are in the bull market. Okay, by definition. So when will the market stop? There are three types. One, when during a day, if a stock, the volume is so much within a minute, there's 100 million buy, 100 million sell, 200 million buy, something like that, then the stock will be called halted. You will see the stock being halted, meaning they stop trading, maybe 5 minutes, maybe because the computer could not execute because many demand. A lot of people buying, a lot of people selling. The execution, the broker couldn't keep up with it, so they will stop trading. They call halted. That's type number one. Number two, within a day, if the index dropped more than 10%, it happened before. It happened in the dot-com company, the dot-com era. It happened in September 11. It happened in the financial crisis in 2007. Within a couple of hours, the market dropped more than 10%. The stock exchange will stop trading for an hour. Why do they do that? They want people to calm down. Otherwise, it's going to drop more, right? They want people to stop selling, calm down. So they will stop the stock exchange for sometimes 30 minutes, sometimes 15 minutes, but usually about an hour. Nobody can trade. Stop. The only reason they do that is to make people calm down. Okay. Type number three is something happened, like September 11, the two buildings in New York being terrorist. They will stop that day. In fact, September 11, the stock market dropped 3 days. Why? Because they want to protect the people working in there. They don't want to somebody bomb the stock market, right? So they want to protect the people, so they don't want any people in the building. So they will stop trading. So again, when you go to stock market, you have to understand the three types. when the circuit breaker hit. One, too much volume in a couple of minutes. Two, drop more than 10% within a day. Three, tariffs. Something happened, right? Somebody put a warning, hey, I put a bomb in the stock market, right? If the police said, hey, somebody going to bomb the stock exchange, they're going to stop it. They're going to have everybody go home. They're going to close the stock market for that day. Okay? Fear, you have to understand fear, uncertainty, and doubt, we call FUD. That means wrong news. Some people, sometimes the market is rigged, right? So sometimes the media, if they favor Tesla, they're going to put out all the good news for Tesla. If they don't like Tesla, the writer going to put out FUD, meaning something not true. So people scare and they're going to sell Tesla. We call it FUD. So you have to be aware of FUD. So when you read the news, you have to verify, is the news correct or not? Don't just listen to the news. Oh, you got to sell Tesla. No, we have to verify it to make sure it's not a FUD. Okay, very important, because a lot of people panic and they sell. Okay, macroeconomic. So I will go very fast on this. Okay, so Federal Reserve is central bank, right? So the U.S. government have a Federal Reserve, and their job is to manage money for the government, right? So if President Trump or President Biden say, "Oh, I want $1 trillion to do something," right? So the Federal Reserve will loan them $1 trillion, with the interest right now is about 5%. So let's say President Trump today say, "Hey, I want $1 trillion to improve military." So where is $1 trillion come from? It comes from the Federal Reserve. So Chairman Jerome Powell going to say, "Okay, I'll give you $1 trillion with 5% interest." So the government have to pay back the interest 5% to the Federal Reserve. Okay, that's how they get the money from the Federal Reserve. When the Federal Reserve, to control the inflation, they can throw the money in the market. We call quantitative easing, QE, meaning they put the money in the market to help the market, to help the economy. When the economy getting better, they're going to withdraw the money from the market. It's called quantitative tightening, QT. So in other words, when the Federal Reserve do QE, the market go up. When the Federal Reserve do QT, market go down. It's not TA. I repeat, not TA. Got nothing to do with technical analysis. If Monday, Jerome Powell said, "I'm going to put $10 billion to the market," stock going to go up. Got nothing to do with TA at all. Understand me? Okay? So the Federal Reserve have 13 members. And the way they design, very democracy, right? So Chairman Jerome Powell is the chairman. Under him, there are 12 voting members. And half of them are from Democrat, half of them from Republican, to balance out. Okay. Otherwise, if you have 12 members Republican, they're gonna do favor for the Republican, right? If you have 12 members for a Democrat, they're gonna do favor for Democrat. So they divide it out. 6 members are gonna be Democrat, 6 members are gonna be Republican, so that they can balance the power. And these are the members that you want to pay attention. So let give you an example. Fed Cook, his last name is Cook. If you look at here, is he a voting member? Yes. If you listen to the news, oh, Fed hawker say something, you don't care. He's not a voting member. You don't care. You don't care about him, because he got nothing to do with it. He just talk. He got no power. He cannot vote. But if Fed Cook say something, you listen, because he's a voting member. So you want to look at the picture when you see a Federal Reserve chairman of New York or San Francisco or Denver talk. You have to know if he's a voting member or not. If he's not, he's saying it's not important. Understand me? So you have to understand who's who in the zoo here. So here's the website. I have a link up here. You can go into the link up here. It tells right now it's 83% chance that the Fed will keep the interest rate the same. only 70% chance they're going to increase or decrease. So you want to monitor the website if you interest in the interest rate go up or down. So why the inflation go up, right? So the Fed increase the interest rate to make the people spend less money, right? So the reason inflation go up because 100 people want to buy a TV, but Costco only sell 50, right? So Costco gonna say, oh, more people want to buy, I'm gonna raise the price. Supply and demand, right? So when they do that, the inflation go up. And in order to control to go down, the Fed can increase the rate so that people don't buy anymore. So let's say you want to buy a TV $1,000, and you look at the credit card interest rate, it's 25%. You want to buy it? Hell no, right? But if the credit card interest rate drop to 16%, do you want to buy it? Of course. So the interest rate is the tool for the Federal Reserve to control the inflation. If people spend too much, inflation go up, he's gonna raise interest rate. Like nobody want to buy house anymore, right? The 30-year market right now is 70%. I mean 70%. But if the market go down, more people will buy. The reason is he want to control the spending. Okay, so if they cut interest rate or they do QE, QT, depend, right? They do QT, market drop. They do QE, market go up. So don't think that Jerome Powell doing thing having fun. No, he's not having fun. There's a reason why he want to raise interest or cut the interest rate to control the inflation. Okay, and it relate to the stock market, right? Or number of job rise or unemployment fall, right? The market will drop. But when job fall, unemployment rise, the market go up. Oh, why is that? So when the job rise should be good. Why the market drop? Well, the reason is when the job rise, that means more people have job, and more people have job, they will spend money, right? If you don't have job, you don't spend money, right? If you have job, you spend money. So when you spend money, the Federal Reserve, the Wall Street thinking is Federal Reserve will raise interest rate. It go opposite. So in other words, when the job rise, the economy is good, but it's not good for the market because the Federal Reserve will either increase the interest rate or won't cut it. So when people have less job, less people spending, inflation go down, then he will cut interest rate. So you have to think the opposite, okay? So don't think like, oh, when more job, that means stock market have to go up. No, it doesn't work right now. In a normal situation like 5 years ago, yes, true. But in this situation, it work opposite. Okay, so when you see every month, Department of Labor said, oh, number of job increase to 200,000 job. That day, market gonna drop. Guarantee, market gonna drop. It go opposite. Okay, recession. What the hell is recession, right? So there are many ways that the economists determine recession. Recession if 2-year yield bond higher than the 10-year. So the short-term yield higher than the 10-year yield, that's an indication of recession. Okay, or have an economic shock, right? A momentary policy interest too high, and things like that. Then market will crash when they have a recession. Right now, like I said, the United States government owns $36 trillion to the Federal Reserve. Okay, and if you take the interest rate by 5%, you know how much the government have to pay interest every month? Billions of dollars, just interest only. Okay, and that's equivalent to divide by 350 million population. So every American right now own about 100K, which is true, right? You average it out. Some people have a $1 million mortgage. Some people have a $30,000 car loan. Some people live in an apartment, don't have mortgage. Blah blah. Average out, this number about 100K, which is no good. You want this number as small as possible, right? And GDP, you have to look, when you invest in the stock market, you have to understand GDP, right? Right now, the United States GDP about $33 trillion, right? Vietnam only 700, if let's see if I correct, 750 million or something like that, right? Very little. Thailand, Vietnam, very little. United States is number one, $27 trillion. I think China number two. China probably about 20 trillion. They right behind United States. So you want a GDP goal of United States to 2.5%. Okay. So here's the problem. So the U.S. deficit, that means the trade, that the amount of export import. If you compare that to GDP, right? In 2016, only 3.5%. Last year, it's 6.5%, which is no good. You want this number to be small, right? So that means U.S. export less than the growth of the GDP, which is no good. In fact, you want this number zero. It's better. Okay. So when the new come out GDP go up or down, it will move the market because of this. Okay. So a lot of economists said the yield, short-term yield higher than long-term yield, it's called inverted yield curve. That indication of a recession, or the U.S. GDP for 2 consecutive quarters. If these two happen, United States will go into recession by definition by the economists. Okay, but it's not true. It's not 100% true. Reason is in relate to the stock market. If the company earning report like NVIDIA earning report, Microsoft, Amazon, if it continue to grow, United States not going to go in recession. So don't be fooled by CNBC and Bloomberg every freaking day. They go, oh, United States going to go into recession. No, it's not true, because you look at earning. NVIDIA beat earning, Microsoft beat earning, Facebook beat earning. Every Magnificent Seven company, or Coca-Cola, Pfizer, right? Home Depot, Walmart, whatever, right? As long as majority, you cannot have 100%, right? But out of 100 company, 70 company EPS go beat earning, it's not going to go into recession. So the economic fool you. It worked in the old day, old school thinking, but the new technology right now, as long as the company beat ER, we're not going to go into recession, period. So my point of this chart is don't be fooled by the news. Don't let NBC and Bloomberg fool you. Every day they go, oh, America going to recession. No, it's not going to happen. Unless NVA miss earning, Tesla miss earning, Facebook miss earning, blah, blah, blah. Every company in the United States miss earning. Yes, we go into recession. But the company making money, you're not going to go into recession. Okay? So I want to point out so that you can understand. You look at here. Why do we invest in long term? You look at the market, up, down, up, down, up, down, up, down. But in general, it's going to go up. So if you buy here and you go down, oh, I'm scared, I'm going to sell it. And you buy here, oh, go down, I'm going to sell it. Wrong thing to do. Buy and hold. You will win. Regardless the market drop. If you jump in and jump out, that means you time the market. You time the market, you're going to lose. Nobody can do that. Even professional, they cannot do that too well. Okay? So, short seller. I mentioned earlier, when the market go down, the stock go down because the short trader. And I'm scared of them. Why? Because when they short, they can short 100 million. Sometimes they short 100 million share. Option trader, nothing. I'm not scared of option trader. Option trader, they how many contract, right? 1,000 contract maximum, right? Do you know anybody trade option at 10 million? I don't think so, right? Most people trading option like 100,000, a million, right? But the short trader, which is the big shark, right? The institution, the hedge fund, they want to short stock because they want to stock go down. The more stock go down, they're gonna make money. So if you buy Tesla at $350 a share, they want to short it to 300. So when the stock go down, these guys make money. Okay, and they also use high frequency trading. High frequency trading is a computer program by the institution. They hire PhD về mathematics, PhD về programmer, PhD về physics, and so on and so forth. These people, they sit down, they write the program, they execute the high frequency trading by computer. Every day, they can trade like 100,000 trades. So not like us, like make a couple trades, right? So these guys can short stop. So sometimes when you look at the market, everybody go down. Not like, okay, Tesla go up, NVIDIA go down, AMD go up, Microsoft go down. No, the whole thing go down. Like Microsoft, Tesla, Google, Home Depot, Boeing go down at the same time. That's the indication of high frequency trading executed. And it can happen anytime. Nobody know when. Okay, so that's why during day trading, I tell my student, if you have profit, lock it, sell, take profit, because at any given time they do SFT, you're gonna lose. Tesla can go from 350 down to 320 in a couple of minutes because with a lot of volume, right? Here, for example, Tesla. So to access that you have to pay, right? I pay about, I can remember, $1,000 a year or something like that. So I can have this data. I look at Tesla, the short interest, 3.5% of the float share. Okay, I explained to you the float share, right? So the short interest value that the hedge fund, $25 billion. That's incredible. Every day they short $25 billion Tesla, right? So why I tell my student that don't short stock. In fact, everybody short stock that I know in my group, I will ban them. I will kick them out of the group. Here's the reason. So you guys, the new people don't know, right? But the old people know that I've been through a cancer, right? I have cancer about 2 years ago, and lucky that I beat the cancer, right? But I'll tell you a story. So let's say 2 years ago, I lie down on the table, and the doctor gonna operate me, right? Or she's gonna operate my throat to clear the cancer, right? What happened if the doctor said, "Two, I cannot operate you today"? Then I asked her why. Well, you know all the biotech company that you short, they go bankrupt. I don't have equipment to operate for you. Then what? So remember earlier I told you if you buy a stock, you own the percentage of that company. If you are American, which I think you are, why the hell do you want Tesla fail? Because the more Tesla fail, when you short, you will make money, right? Tesla from 350 go to 300, you make money. That means Tesla fail. Pfizer, Moderna, Home Depot, Boeing, whatever, right? So if you short Boeing, right? Boeing right now $180. You want to short down to 150. So when Boeing go from 180 to 150, you make a lot of money because it's going down, right? When you short stock, the more stock go down, the more money you're gonna make. You lap all the way to the bank, right? Think about it. 150,000 Boeing employees gonna cry because their 401k go downhill. Because Boeing go from 180 to 150, their 401k go downhill. Why the hell you want that? Why do you want the stock go down so you can make money and you don't give the hoop? 150,000 people crying. You know what I'm saying? So my philosophy, don't ever short stock. If you are American, you need to protect American company. You don't short company. Period. Okay? I know a lot of Vietnamese short stock because they don't understand it. Either that or they don't give a hoop about the United States economy. You want a company, US company go up, you don't want a US company go down. So by shorting the stock, that means you wish the company to fail so you can make money. That's the wrong thing to do. Okay? Very important that you don't want to short stock. Trade option, same thing. Trade option have a lowest probability to win. Don't ever, 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 ever touch option. You're gonna blow up your account, which happened to me. Okay? Stay away from option. Don't listen to the Vietnamese teacher that they scam you. Don't listen to them. Please. If you trade option, you're gonna blow up your account. Period. Just focus on long term. Okay? So why the stock go up? One, the institution buy a lot of volume, right? They buy 100 share, 100 million share, 50 million share. Retail trader like us, like buying stock, it go up. Good news, company win a contract, that's like doing FSD or something like that. They're good news, stock gonna go up. Good earning report, that means the company doing well. They beat earning, it go up. Or Elon Musk, sometimes he tweet about .com go up, right? Sometimes he triggered by the tweet, right? Or somebody tweet about something, or Tim Cook said he's gonna do business in China, something like that, it go up. Option trader, bullish trade, I mean they call mean they go up, right? Fail to deliver, fail to deliver. So when people shorting stock, they borrow the share to short, right? And they will make a promise they will return the share within like 14 days or 15 days or something like that. But sometimes in situation they cannot return in 15 days. It's called fail to deliver. That means they have to buy to cover. When they buy to cover, the stock go up. So the more FTD share fail to there's a link, or you can Google it, right? You can find out what's the FTD for Tesla. You can tell that how many share that FTD. The more share FTD, the higher chance it's gonna be short squeeze because they have to buy cover. So when they buy to cover, that means short squeeze. Stock gonna go up. Okay. Federal Reserve do QE, throw the money into the market. Stock gonna go up. When the stock go down, that means the big institution they sell, like yesterday, right? Because of the new COVID in China, maybe a new pandemic, right? So people panic, they sell, and institution they sell with a large volume, and it go down. Or us, we retail trader, we scare, we sell. Bad news, Tesla car burn, people die, accident or something like airplane crash. Bad news can make the stock go down, right? Bad earning report, maybe they miss earning, or Elon tweet something that people don't like, stock can go down, right? Option trader put stock will go down. Or retail investor short stock. And the Federal Reserve do QT, meaning they withdraw the money from the market, stock will go down, right? Or the event like COVID, war, terrorism, it can go down. So many reasons why the stock go up and down. The point I'm trying to make here is when you see the stock go down, you have to understand why is it go down, right? Is it got anything to do with fundamental, or is that because of an external factor? If Tesla go down because of COVID, that's not Tesla's fault, right? If Tesla go down because President Trump do something, got nothing to do with Tesla, then you hold on to Tesla. But if Tesla go down because they don't want to do FSD anymore, they cancel the robo taxi project, that affect the fundamental. Then you want to sell Tesla, right? So you have to understand when the stock go down, you have to understand why it go down. Does it get anything to do with fundamental? If not, hold it. If it affect fundamental, then you have to make a decision that you want to sell or not. So you can Google, you can go to website, finance, you can find a new thing like that to find why the stock go down. So just don't think, oh, Tesla go from 350 to 320, sell. No, don't do that. If you do that, you're a beginner. You don't understand about stock market, right? And you can go to the website or you can Google fear and greed index. It's an indication to tell you the overall sentiment of the market. meaning what the state of mind of the investor right now is greed. Would that mean a lot of people want to buy? If this needle go down to extremely fear, that means a lot of people sell. So by looking at this, you say, oh, right now the market people want to buy. More people want to buy than people want to sell. Okay, so this not 100%, but it's an indicator for you to understand the overall of the market right now. Okay, so when you read the news, do you want to trust them right away? No. Even political news from CNN, from Fox News, or CNBC, or Bloomberg, doesn't matter what. You have to do research before you make the decision this news is real or not. Okay? So I give you an example. Dan Ive, he said Tesla gonna go up to 550. Everybody happy. Oh, hey, Mr. Two, Danny said Tesla go to 550. You should be happy. Okay. Gordon Johnson, he put out a price target. Tesla $24. $24 a share. Right now, Tesla is 350. And this guy right here, he said Tesla gonna go down to $24 a share. Do you believe him? Well, you can do Google Gordon Jensen tip rank. You will see the picture. What did the picture tell you? Look at him. Review, not even 1 star. Out of 5 star, he not even have a half star. If you go rent a hotel and you look at the review, only half a star, you want to rent that room? Hell no, right? The review is so bad, right? Number one, look at his average return, negative. That means this guy himself is not successful. He's not the guy you want to trust. You look at this guy, he do music on your ear, right? He said Tesla go to 550, Tesla music on your ear, right? But do you believe him? Okay, look ahead. 4.1 star, which is good. Return positive. So between the two, you trust this guy more. You know what I'm saying? You cannot be biased. You cannot just listen to people new and you believe them. You have to verify the data. That's what I meant. Okay. So here, there are a bunch of people. Danny put that 550. John Murphy, 490. Gordon Johnson, $24. And me, I just making a joke, right? Myself, I said, buy. Tesla gonna be like $4,000 by 2030. Do you believe me? Hell no, not yet. I have to prove it to you. You cannot take my word for it. Okay? And today I'm gonna prove it to you why it's gonna go to $4,000, right? So my point is, when you look at the target, and every time the people going earning a target, that means they predict within 12 months Tesla gonna go to 550. Gordon Johnson said within 12 months, Tesla going to go down to $24. But you're not going to believe him because his record is so bad, right? You don't want, this is not a trustworthy guy, right? So, but the point is the target is for 12 months. But the DCF model is for 5-6 years. They're two different things. And I will explain DCF in a minute. There are 11 sectors in the stock market, the total 11 sectors. Energy, material, industrial, utility, healthcare, finance, consumer, blah, 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 right? Real estate. So, for example, Apple, NVIDIA is in information technology. Boeing is in the discrete consumer, right? Airline, Alaska Airline here. McDonald's, Pfizer, right? So in the healthcare sector, right? Bank of America, JP Morgan is in finance sector. So why do I show you this? Because each of the stock will be in one sector, right? So sometimes when the real estate go down, right, the house price go down, the institution will rotate. They will sell real estate and they move to technology. It's called rotation. So when you look at the heat map of the stock market, sometimes you see information technology really green, finance red, real estate red, because the institution they move the money they go with the flow, right? They go with the trend. If the real estate market trend down, they're going to sell and go to technology. If technology go down, they're going to move to financial. So in other words, you have to understand the money flow so that you know where or when to invest, right? So if the real estate are red, that's when you want to buy because you have a good price, right? Because nobody want to buy house anymore. So the real estate sector been going downhill, right? Because you want to buy low, sell high, right? But information technology is so green. You want to come in right now? Probably not, because the stock goes so high already, right? You don't want to buy a high price. So here's another indicator. It's not 100% but indicator for you to make a decision when you invest in what sector. Understand what I'm saying? If any question at all, stop me, okay? So here's an example. Energy sector, like XOM, Mobile, Material, Home Depot, Industrial, Boeing, Tesla, Utility, Duke, Healthcare, Johnson and Johnson, Finance, JP Morgan, blah, 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 right? So each of the stock belong to, like Apple, Microsoft, NVIDIA belong to information technology. So a lot of time, this sector red, this green, this red, because they moving the money around. Because their job is to make money, right? The institution, they manage money for people. They want to make money. They want to make sure they go to the right sector at the right time. So don't be surprised that one day this sector red, but the next day green, because they're moving the money and they're moving hundreds of millions of shares, not just like us, a couple hundred shares, right? Okay, so the ETF trade fund, like we a lot of time we day trade. Since today focus on investment, so I'm not going to talk about too much about those. Okay, here's the famous uh, forward by Warren Buffett. If you don't find a way to make money while you are asleep, you will work until you die. What does he mean by that? Meaning you have to invest long term. Because let's say you have 100 shares in Tesla, right? You sleep and Tesla go up, you still make money. That's what he meant. What he meant here is you have to invest in long term and let the compound interest do the job for you, and the company grow do the job for you. Okay, you don't get rich by learning TA. You don't get rich by day trade. No, hell no. You get rich by doing long term. Period. If you don't understand that, you're gonna lose the rest of your life. Very important. So, like I said, you need something. You need to invest money that you don't need right now, and you want to hold it for 5 years, and you 80% of your account to do long term. If you want day trade, then 20%. Okay. So stock evaluation. First, you have to understand fundamental analysis, which I will explain in a minute. Second, who the hell is the CEO, right? If you say Elon Musk, everybody knows Elon Musk, right? So you have to understand Elon Musk is a good guy, he's smart, or Boeing CEO, Boeing have a new CEO, Intel have a new CEO, right? You have to Google that name and you study where he coming from, what his work history. Is he a good guy, a smart guy? Have he done anything in the past? Like the Boeing CEO, new Boeing CEO, right? In the past, he's a Boeing for Sunshine and I can't remember the new Boeing CEO, Lockheed or something. He was the VP of a aerospace company before he joined Boeing, right? Which is good. You don't want to bring a financial guy to manage Boeing, right? That's the wrong thing to do. So what I'm saying is you have to understand that company. You have to know who the CEO, right? You have to understand the long-term business model. Like for example, Tesla, what they do? They're gonna create FSD, robo taxi, robot. That's the long term, right? Boeing, they're gonna do right now the latest airplane is 787, but they have a plan to do 797 and so on and so on. You have to understand the long term. What are they gonna do? Like Apple, they have iPhone 16 now. They may go iPhone 19, 20, 21, 30, who knows, right? iPad Pro, iPad Mini Pro, so all the product, future product, long-term business, you have to understand what do they do, right? Consumer, do they need a product? Anybody use iPhone, right? Everybody drive Tesla nowadays, right? So everybody go to travel by fly Boeing airplane, right? So those are the things that you want to consider, right? The company have a competitive advantage. Like Boeing, any company in the United States compete with Boeing? No, no, except Airbus, which is European, right? But within the United States, nobody design aircraft except Boeing, so they have a competitive advantage. Anybody in the United States do FSD? No, only Tesla. So Tesla have a competitive advantage. Anybody design iPhone? No, only Apple. So they have competitive advantage. Costco? No. Why? If you don't have Costco, you can go to Safeway, Fred Meyer, you go to Winco, the many other place you can go. Even Costco go bankrupt tomorrow, it doesn't hurt you. It doesn't hurt the consumer. So Costco is a good company. Yes. You want to buy it? Maybe, maybe not, because they don't have a competitive advantage. You understand what I'm saying? You pick something that nobody can compete, so that you can win, right? Technology competitive, growth rate. You have like the profit margin I showed you earlier. Tesla 14%, right? They have a positive growth rate. Will Tesla bankruptcy in 5 years? I don't think so. Will Costco bankrupt in 5 years? Maybe. Will Boeing bankrupt? Hell no, because the government gonna sponsor Boeing, right? Doesn't matter what. I don't think the U.S. government gonna let Boeing go bankrupt, because they design Air Force One, they do missile, F-16, Blue Angel, helicopter, Apache, submarine, long-term missile ran. Boeing not gonna go bankrupt, right? So you have to pick a company that will survive long term. Costco, I will stay away from it, not because they're not good, but nobody care about Costco, right? If Costco go close down tomorrow, nobody care. You still survive, right? But Boeing go bankrupt, how the hell you gonna go vacation? If you want to go to Hawaii, how the hell you gonna get airplane, right? You know what I meant? That that's very important to consider. So when you're doing fundamental analysis, there are two types: qualitative and quantitative. Quantitative is something you can measure, you can count, right? Because quantitative, right? For example, access, liability, revenue, you make money or you don't, right? You have cash flow or you don't. PE, you can count, big or small, right? That's called quantitative. So you have to look at all these parameters before you determine is a good company or not, right? So qualitative is something you cannot measure, right? It's called fundamental analysis, but you cannot measure. For example, is Elon good? You cannot measure how smart he is, right? You know he's smart, but you cannot measure it, right? Or bad management, good news, bad news, COVID, uh, bad management. These are things that affect the stock, but you cannot measure. But it's still considered a fundamental analysis. So the stock price go up or down because of FA, not, I repeat, not because of TA, technical analysis. Got nothing to do with technical analysis. If tomorrow, if Monday, Elon said, I changed my mind, I don't want to do robo taxi anymore, that means it affects fundamental. The Tesla gonna go down. Tesla gonna crash. Or Monday, Boeing CEO come out and said, nope, we're not gonna design 797 anymore. Boeing gonna drop. It got nothing to do with TA at all. So you have to understand the stock price go up or down are triggered by fundamental, not because of a technical analysis. Okay, very important. So if you look at the Tesla, the history of Tesla, every time Tesla go down, it come back up. Every time go down, come back up. Down, up, down, up, down, up. 11 times in the history. Every single time Tesla go down, it come back strong. For example, from here, go down here, all the way up. What this chart tell you? Long term, you will win. If you jump in and jump out, like many Vietnamese teachers tell you, oh, Tesla 350, don't buy it. Wait until 300 or wait until it go down to 200. No, wrong thing to do. Remember the early chart I told you that your initial investment is 5,000 and every month you put in 200, it compound interest. The more you buy, the more compound interest you're gonna get. But if by jump in and out, if you do it wrong, you're gonna lose. So just buy and hold. Tesla, even though it go down, it's gonna come back up. Because why? Because it has good fundamental. The Tesla company is a good fundamental, or Microsoft, or Amazon, or Google, right? They're all good company. They may have some event, some bad news here and there. You know, everybody have bad news, right? Boeing airplane crash, NVA delay, GPU, blah 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 blah, right? But overall, long run, it will go back up. So don't be fooled by CNBC, Bloomberg, or Vietnamese teacher. Oh, sell Tesla. No, don't do that. Once you determine Tesla in your portfolio, that means you have to have strong conviction. The Wall Street, they said strong conviction. What does that mean? Strong conviction, that means you believe in Tesla business model. You believe in Tesla fundamental, buy and hold. That's it. Very simple. You will beat everybody on the Wall Street. I give you an example. Um, this is why I very, very against my student to study TA, because you're gonna wasting your time. I give you a real example. My sister-in-law during COVID, right? COVID, she called me, too. I have $200,000. What do I need to buy? I told her 3, right? At the time, I was gonna say 5, but since she only have 200 grand, right? But you divide by 3, you buy Tesla, NVIDIA, and Apple. That's it. What do I do? Don't touch it. I told her, forget about it. I asked her first question, do you need that $200,000? She said, no, that's my saving. Okay, buy, don't touch it. Right now, she make money more than a professional. I asked her, do you know stock market? No. Do you know what PE is? No. Do you know what trading view is? No. Do you know what CNBC? No, I never watched it. She know nothing about stock market. But she bought those 3 stocks 4 years ago. She make a lot of money now. Does she know TA? Hell no. Does she do day trade? No. Everything is no, except she do one thing right: buy and hold. That's it. She make a lot of money now. She probably have close to $1 million right now. Understand me? Don't waste your time on TA. Put your effort on long-term investment, please. If you want financial freedom, but pick the good stuff. If you don't believe me to buy Tesla, that's fine. You can choose Google, good stuff. You know, go through the learning process. You do fundamental analysis, pick a good stuff, buy and hold. Doesn't matter who said. Don't sell it until 5 years, 10 years from now. You will win. That's a guarantee. Just the question how much money you make, a lot or less, right? But you will make money. You're not gonna lose. Buy and hold, you will not lose. Guarantee. Okay, NBA, same thing. 9 times in history, every time NBA go down, go back up. Every time go back up strong. Down, go back up strong. So the CNBC, Bloomberg, all the bank institution, they're gonna come out, they throw out a FUD, right? Fear of missing, fear of uncertainty and doubt. Oh, NBA gonna do this, oh, bad news. They want you to sell it. They scam you. And they make you scared and you sell. You're gonna lose. But if you keep holding it until you meet your goal of $1 million, let's say your goal $1 million, right? If you have $1 million, then sell it. Not until you have $1 million. Don't sell it. Don't touch it. Buy and hold. You will win. Okay? So I will go quickly. You don't need this because in our group, we develop an indicator to help you out. But if you have to do it by hand, I will explain it to you. What's the earning per share? Earning per share, the formula is you take the profit after tax, you divide by outstanding share. I just tell you the formula, but you don't need to know. Because right now you can go to Yahoo Finance, you can look EPS right away. For my time in the old day, when I study stock market, I have to do by hand, right? I don't have Yahoo 20 years ago, right? I don't have Google 20 years ago. So when I do homework or do a test, I have to do by hand. But nowadays, you just go to Yahoo, you can find out EPS right away. But I just want to tell you the formula, it takes the net profit divided by outstanding share. You want to come out EPS, okay? So usually the PE, if you take the price per share, which is that like 350, you divide by EPS, you're gonna come out PE. But again, you can look at Yahoo, you know right away what Tesla PE, right? But if you want to calculate it, you just take the price, the share price, divide by EPS, you're gonna come out PE. Yes. So the rule of thumb, PE small is good, PE big is not good. Yeah, go ahead. Question? Somebody just have a question? No? So if you look at the PE, if it's more than 100, no good. Under 100, okay. But as low as possible. If you look at Coca-Cola, probably 20. If you look at Pfizer, maybe it's 20. All the big company, stable company, the PE very small. The smaller PE, the better. Okay. So look at here, NVDA PE 54. That means under 100. That's good. So EPS is $2.53. So you can go to Yahoo and you can fire away right away. You can tell the PE. But if you want to calculate it, you take the $130 share, you divide by EPS, you come out PE. But you don't need to do that. Like Yahoo already tell you. But if you want a formula, this is the formula to calculate. So book value per share, right? What the hell is book value per share? You take the market cap, you divide by book value, right? You come out book per share. So for example, you look at the company A, book value per share 50, 50, 50, price, this company $21, this company $21. So you take price divide by book. So this company A is 0.42. This company B is 102. This company is 192. This company is better. This company is undervalued. But if the book divide by price divide by book, that means the price per book is too big. It's overvalued. One is okay in the middle. So if the book value per share, right, it's less than one, that means the company is under intrinsic. The intrinsic value is below the intrinsic value. So you want to buy the company that have a smaller one. If the company have bigger one, doesn't mean it's bad. But if you have a choice, you pick the one that have under one. Okay, this is part of the doing fundamental analysis, but you don't need to do that. Once you have the indicator, but developed by us, you don't need it. It do automatically for you by computer. Okay, but if you want to learn, do it by hand. This is how you do it. Okay, PE company same price, right? 50-50. EPS $10. This company EPS is 5. So the PE is 10, this PE is 5, this company is better. The smaller PE, the better. Even though the price are the same, but the PE is smaller. That means you want to buy company A. You don't want to buy company B. Okay? Return on equity. What's the return on equity? It takes the net income divided by shareholder equity, right? They call ROE. A lot of people, bank institution, they look at the return on equity, right? So if more than 20%, the ROE more than 20%, that means good. Rule of thumb, right? If you can go to Yahoo Finance, you can find out right away. You don't need to calculate it, okay? So return on equity, this is the favorite indicator that Warren Buffett, he loved to use ROE. Every time Warren Buffett look at the company, he look at ROE first, okay? So less than 10%, very bad. 11 to 16%, okay. More than 70%, very good. More than 20%, excellent. So Warren Buffett always look at a company that have ROE more than 20%. That means the company are very good. Good meaning making money. Okay. But the gold company like Tesla and Nvidia maybe ROE not 20%, right? But they're still growing, right? So Warren Buffett, he only buy value stock. He doesn't buy he doesn't like to buy gold stock. Okay, but that's a different topic. Okay. Operating margin. Operating margin, you take the margin divided by net sale. So you want the operating margin as big as possible. Like you have a tiệm phở, you have a noodle shop, you have a nail shop, right? You want a profit margin high, right? You don't want to buy a shop that have a profit margin very low. You don't want to buy that, right? So the higher profit margin, the better. So here, just a summary. There's a many indicator, but here's the main one. Market cap have to be more than $100 billion. Plenty. Right now, this chart is old, but right now, plenty, I think more than 100 billion. You look at Apple, $3 trillion. NVIDIA, 3.6. Tesla, 1 trillion. Way more than 100 billion. So these are the companies you want to give a thumb up, right? You cannot base on one indicator. You have to combine many indicators, but at least you give it a green light. Okay. Next one, PE. Small and good, right? Apple under 100, under 100, under 100. So you give it a green light. EPS, make money, make money, make money, give a green light. At the time of this chart created, Plenty didn't make money, it's negative. So you give it a yellow, right? Next one, dividend. Apple give you dividend. NVIDIA give you dividend. Tesla, no. So Tesla no good on this indicator, give yellow, okay? Price per sale, 19, good, no good, good, so on and so forth. So you base on this table, you base on this framework, and you can put in green is good, yellow is not good. So you look at Tesla, only one yellow. NVA, two yellow. Apple, three yellow. Overall, they're a good company. But if you look at Plantier is better now, right? A few months ago, I did this chart a few months ago. 1, 2, 3, 4, 5, 6, 7 yellow. No good. At the time, it's no good. Right now, I think plenty of a lot of green because they've been improved the last 6 months, right? So you have to monitor this in order to evaluate company is good or not. Okay. So our group developed an indicator called FA, right? So if you go into the group, you will see the FA indicator, right? So the FA indicator, if you look at down here, there are 28 parameters. These are all financial fundamental number, right? So if you look at Tesla, 1, 2, 3, 4 red at the time of this chart. Tesla right now only have 2 red, I think. It's getting better. But at the time of this chart created, they have 4 red. The rest are green. That means it's good. So you only go in here, you click 1 second, you will know company is good or bad. You don't need to do a fundamental analysis at all because we do it for you by program. This number, we get it from Yahoo Finance. And with the formula, based on certain condition, if this condition good, print out green. If condition bad, print out red. So the more green, the better. But save you a lot of time and research. You don't have to do research anymore. Now the computer age, right? Computer era. You don't need to do by hand. You don't need to punch in the calculator and figure out what PE, what EPS, right? We do it for you by that indicator. One click, you will know company good or bad. Okay. Here's an example. Tesla, NVIDIA. You look at Lucid. You one click, you look at Lucid. Do you want to buy Lucid right now? Hell no. It's all red. That means financial, in relative to financial, Tesla in big trouble. I mean, Lucid in big trouble right now. You don't want to buy this company. No. Okay. So dollar cost average. What I recommend is, let's say if you want to buy 400 shares of Tesla, never all in. No. You don't want to, Monday you buy all 400 shares. You have to divide by 8 times, right? Every time you buy 50 shares. So you can dollar cost average. That means you average out your price. So if Tesla go down a little bit more, buy 50 more shares. If the Tesla go down a little bit more, buy 50 shares. That way you minimize your risk, right? So you don't want to buy one shot at 400 shares. No, you divide it out. They call it DCA, right? Dollar cost average. So here, a lot of people ask me, Mr. Tu, should I buy NBA right now or should I wait? Tesla go down to 300 and buy. I'll tell you, it makes no difference. Okay, person A, right? No, let's do person B. Person B, like me, I don't give a hoot. I have money, I buy 50 shares, right? At $200. Tesla go up to 500, I buy 50 shares. Tesla go down 190, I buy 50 shares. Even Tesla go to $400, I still buy 50 shares. So you add them all up, you average it out. My average price is 235, and I spent $94,000 to buy 400 shares. 8 times, right? 1, 2, 3, 4, 5, 6, 7, 8. I divide out 8 times. I spend $94,000 because I don't care. Tomorrow I have money, I buy Tesla. Next month Tesla go to 500, I buy 50 shares. Next month it go to 600, I buy 50. I don't care. What I care, do I have money or not, right? So that way I spend 94,000. This guy is smarter, right? He wait. He buy lower price. He buy 8 times too. But because he wait for lower price, so it cost him 73,000 to buy 400 shares. So my cost $20,000 more than him. At this time, he's gonna laugh at me, right? Mr. Two, you are dumb. I only spent 73,000 buy 400 shares. You spend 94. You are so dumb. Okay. If 2030 Tesla go up to 250, which we think it will, right? Both of us have close to $1 million. But I have this guy have $1 million. I have $980,000. $980,000. I have $20,000. Do you care? Do you take 980 or you want to take 1 million? Do you even greedy enough? Say, no, I don't want 980,000. I want 1 million. No, you don't. It don't make any difference. The difference is if you don't buy, a lot of people missing the boat. When Tesla went down to 180, I told everybody, buy. No, I'm going to wait until it's 100. And guess what? It didn't go to 100. It shoot all the way up. It never go back to 180 again. Then what? You miss the bull run. That kill you. You buy at 400 and the other person buy at 300, that won't kill you. What kill you is you miss the bull run because you're so greedy. You want to wait for the Tesla go down. Understand? This is very important. When you do long day trade, different. Day trade, you want to pick a low price, right? In long term, if you have money, buy it. Why? Because compound interest. Remember earlier I showed you the compound interest. The more Tesla you have, it's compound interest. If you have 100 shares compared to people that have 200 shares, which compound interest will be more? People have more shares. So your objective is to buy more shares, not the price. Unless you buy 1,000 shares, then yeah, you want to wait for a good price, right? But we don't. Most of us buy every month about 5 shares, 2 shares. You don't have money to buy 50 shares every month, right? To be honestly. So if every month you buy 2 or 3 shares, you don't care what price. I repeat, you don't care what price. Just buy it. 2 share, 5 share, right? Every month. Just like you go to work, you have a 401k, you put every paycheck, you put in 10% in your 401k, right? Do you tell me that the stock market on Friday go down, you don't put in 401k anymore? No, you don't. You don't care the market go up or go down. Every paycheck, you put in 10%. Why you do that? Because you know 30 years from now when you retire, your 401k gonna go compound interest. Understand? So a lot of Vietnamese teachers, they are wrong. They are dead wrong. They tell the student, no, wait, don't buy Tesla now. Wait until it go down. No, that BS. They don't understand the compound interest, right? Nobody stop 401k because the market go down. Do you? I don't. From the time I work for Boeing, I put in paycheck. Every paycheck I put 401k. Doesn't matter stock market crash or not. Then when you retire, your 401k going to be a big number, right? Because of the compound interest. So you have to do a paradigm shift. Don't wait for the stock go down. If you have money today, buy 2 shares. Next month, buy 5 shares. Next month, buy 1 share. Just keep buying. We're not going to buy 1,000 shares, right? Nobody have money to buy 1,000 shares. But if you buy 1 or 2 shares, don't care about the price. Okay? And this is very important. This not because this is not me. This is from Warren Buffett strategy. Warren Buffett, I'm not smart enough to create this, right? Warren Buffett teach people do this. Buy a little every month. Okay? Here's a 5 total. NVIDIA, Tesla, Apple, TSM, Boeing, right? Plenty, maybe the total number 6. I'm consider add this at the total number 6 because plenty right now are very good. So these, if you wonder what the 5 total, these are the 5 total. These are the 5 company that cannot live without it. You look at around you. Laundry machine, microwave, TV, computer, all microchip in there. That means semiconductor. Then you need NVIDIA and TSM. They are semiconductor, right? Tesla, you already know about it. Apple, everybody use iPhone, right? That's why I picked Apple, right? Boeing, because not only it design commercial airplane, but it is defense too, military stuff too, right? Air Force One, Apache, submarine, long range missile, helicopter, blah blah blah, right? So Boeing not gonna go bankrupt, right? It have a lot of trouble right now. Boeing crash, so Boeing have a lot of problem right now. But I believe in 5 years Boeing gonna go. There's no question about it. So every company have a problem. So don't think Boeing have problem right now and distract you from buying it. Keep buying it because Boeing gonna go. That's a guarantee. Okay, we cannot live without Boeing. U.S. defense cannot ask a foreigner to design missile for them. No, only American can design missile for U.S. company, right? So Boeing not gonna die for sure. So here's I give you an example. During COVID, right? So people locked down, nobody travel, so airline in trouble. Alaska, United, Boeing, a lot of people cancel contract. They don't want to buy airplane anymore, so Boeing in trouble. Everybody in trouble during COVID, right? So at the time it's President Trump, right? They bail out, so they tell all the executive go to the White House. So President Trump asked Alaska, "Do you need money? I can loan you $20 billion, and with a low interest, right? To help them out, right?" So President Trump, under direction of Congress, give United 20 billion, Delta, everybody take it. Come to Boeing, President Trump asked the CEO, "I loan you 60 billion because Boeing bigger, right? So that you can use the 60 billion to because everybody stay home, no Boeing worker don't go to work, nobody buying airplane anymore, they don't have money to pay the salary." CEO said, "No, thank you." No, Boeing didn't take that. United Airlines, all the airlines take $20 billion loan. Boeing did not. Why is that? Because Boeing is a good company. They can survive on their own. They don't need money. My point is two. One, Boeing is a good company. They don't take the $60 billion loan from President Trump, right? Two, they prove that if Boeing go down, the government, regardless of the president, either President Biden, Obama, doesn't matter who the president is, they will bail out Boeing. Boeing not going to go bankrupt. That's my point. Okay, so my point is very safe to invest in Boeing. even though they have a lot of trouble right now. Any questions so far before I continue? I got the most easy student. Nobody asks questions. Usually, student ask a lot of questions to the teacher, right? Anyway, so
Em thấy là từ mấy em mà 18 tuổi thì cái material quá quá nặng cho tụi nó. Em có hỏi Khang nói Khang không có hiểu nhiều. Còn Bảo Hân á thì lúc à, thầy Tú nói về chính trị chính trị thì ông president nào lên có ảnh hưởng stock market á, thì Bảo Hân không có đồng ý với cái point đó. Bảo Hân nói lát nữa con sẽ gọi mẹ nói về chuyện này. Nói chung là đụng với politics của tụi nó em hơi bị mệt.
Yeah, thì cái so let's continue with stock market. So there's two types of stock. There's a value stock and the growth stock. Okay, you have to understand the difference. The value stock is the stock that's stable, right? Like Boeing, Coca-Cola, Pfizer, Moderna, they are stable stock because they established 100 years ago. Like Microsoft is a stable stock. Amazon is a value stock. But like Tesla, they just IPO 2010. NVDA 1990, only 25 years, right? So they're still going. The product is still new, right? The Blackwell, the Rubin GPU, iPhone 16, 17, 18, 19, right? So those considered growth stock because they continue to grow. You think Coca-Cola go? No. Coca-Cola for many years is still a Coca-Cola red Coca-Cola. Sometimes they come out diet, right? But their product is very stable. So by definition, the value stock move up very slow. Do you see Coca-Cola go up $10 a share? No, right? It go like $1.50, $1, right? But NVA can go up $30 a day. Tesla can go to $30 a day and go down $30 a day, right? Up and down like volatile. Right? They are gold stock. So in your stock portfolio, you have to have half value stock and half growth stock because the value stock is less risk. The growth stock more risk, but high return. High risk, high return, right? The value stock low risk, low return. So in a way, NVDA is a growth stock. Tesla is growth stock. Apple is kind of half and half. Half growth stock, half value stock. Boeing definitely value stock. TSM definitely value stock. Why do you do that? Because let's say pick a number. You have $100,000 each, right? You have 500,000, and you divide by 5, 100K, 100K. So maybe by 2030, the Boeing give you 2x. Whatever the price right now, $180, maybe 3x maximum. TSM, same thing, maybe give you 3x. Apple, maybe 10x, right? It's still going, right? NVDA, maybe 10x, 20x. Tesla, who knows? Tesla can be 10x, 20x, 50x, 60x, who knows? We don't know how successful robotaxi and FSD and robot, right? So there will be the time that stock will go down. Tesla will go down to 105 one time and go to 180 one time, right? Nobody have unlimited money. Everybody have limited amount of money, right? So if Tesla go down like on Friday, right? Tesla go down like Friday, and maybe Monday it go down again because a lot of bad news or whatever, right? So you have $100,000 in Boeing stock, you sell it because it's moving slow, right? It's slow stock. You sell $100,000 Boeing, you buy Tesla. When Tesla drop to 330, you buy it. And then Tesla, you know the history, it will go back up to 360. For example, it can go to 400, right? let's say go to 360. So you make $30 a share. You sell it at 360 and you buy back $100,000 Boeing, and the profit will stay. That means you gain more Tesla share. This technique, Wall Street called reposition stock portfolio. Lately, Warren Buffett, he sold SPY and VO. I think what he's doing is reposition. So he wanted to save cash so he can buy something else that he think, I don't know what he's gonna buy, but whatever he's gonna buy, he think it'll go fast. So in a way, when you reposition, you want to sell the slow stock and you buy the stock that go fast. You don't do the opposite. You don't sell NBA and buy Boeing. No, that's the wrong way to do. You sell Boeing and you buy Tesla. Yes. You sell TSM, you buy NBA. Yes. That way, you have money instead of borrowing loan or margin. You borrowing your own money. So that's the reason why you have to have a value stock. Because stock market, you never know. In one day, some bad news, Tesla can go down to 300. NVIDIA can go down to 120, right? But you know it's going to go back up. But you don't have money, right? You don't have cash. Everybody complained to me that, sư phụ, I don't have money, I don't have cash, because you don't have value stock. If you listen to me, you buy, people say, I don't like Boeing, oh, I don't like TSM. No, you have to, because it going slow, but it save money for you. It may give you return 10% a year, or you can buy VOO if you want. Doesn't matter what value stock you want to buy, but you have to have a value stock so that when the bear market, Tesla go down, you have money to buy. You sell this, you buy this, and you go back up, you sell Tesla, you buy back, so you return back the $100,000 that you sold in Boeing. Understand me? Very important. That's why you have money. A lot of people say, oh, sư phụ Tú, you have a lot of money. How come you DCA all the time? This is why. You have to have value stock, so you sell it. When you need it, you sell, you borrow yourself. Understand? Any question? So that's why the reason I picked these 5 stocks, I have a strategy calculated. Not because I like Boeing, no. It help you. It help you save money. Boeing maybe today 180, maybe next month go 85. Maybe next month go to 190, right? But Tesla can next month it can go to 500. It go very fast. So you want to sell the slow stock and you buy the fast stock. It's called repo. Cathy Wood do all the time. Cathy Wood sell Tesla, buy Palantir, sell Palantir, buy something else, right? Warren Buffett sell Apple, buy something else. They do that all the time. In fact, all the institutions, they reposition all the time. Because they just like us, right? Let's say if you're a fund manager, you apply a job for Fidelity, and you have 10 years with Fidelity. They say, okay, you're doing a good job. I give you $100 billion. So you're gonna manage. That's all you have. You don't have more than $100 billion. So within that $100 billion, you how the hell you gonna buy Tesla? You have to sell the value stock to buy Tesla to make money, and then when you make money, you return it. Okay, very important. Like you have to have the capability of reposition. If you don't, then when Tesla go down, you don't have money. Okay, earning, right? So there are 2 parts of earning: earning report and guidance. Earning report is something this last quarter, right? Last quarter, how are they doing on the last quarter? Guidance is the next quarter. So when you see an earning, there are 2 parts, not only one, but 2 parts. Last quarter is earning report. Next quarter is guidance. They have to beat both of this in order for stock to go down. A lot of time, stock beat earning, but miss guidance, stock will go down, right? So they have to beat both of them to have a high chance that after they come out earning, the stock going to go up. Okay. Okay. Here, what is it? This is the rating by S&P, Moody, and Fish. The 3 companies that they evaluate the company, or the stock market company, right? So you see the red line here. Every stock below this, they call it junk stock. All the stock above this line is good stock. So in relative to your credit, your fiscal Rivian Experian credit report, right? So if you want to buy a house or you borrow a loan, the bank prefer you credit score 680 as a minimum, right? If your credit score below 680, you're very tough to get a loan. But if you are 800, that's different story, right? But if you have to have a minimum 680 or 700 for the bank to give you a loan. So that's 680 is that equivalent to that red line right here. Below 680, that means you have a best credit score. Above 680, you have a okay, right? If your credit score is 750, 80, 800, you're very good, right? So if you have an 800 credit score, equivalent to up here, number one. And who are they? Apple and Microsoft. Okay. Tesla, last couple of years, they below, believe it or not, they, I don't know, it's a political or whatever, they below the red line. But a year, 2 years ago, I think, they bumped Tesla up to BBB minus. So right now, Tesla just above the red line. Netflix next, and then the next one is Amazon, NVIDIA, Google up here. Right now, number one is Apple and Microsoft. Why is it important? So remember on early chart, I told you that SP 500 is the 500 company that get into the SP 500. Dow is 30 company get into the Dow, and Nasdaq and so on, right? So the institution, they will create ETF. For example, XOCell is the ETF of semiconductor, right? Or mutual fund. Within the mutual fund, there are many companies in the mutual fund, right? But only the institution only pick the company go into the mutual fund have to be above this red line. There is no company that in the mutual fund that below this red line. Why? Because when they evaluate the company, they want the credit score have to be above because it's stable. It's good company. Below it's junk. Okay. So it's very important. The higher you move up, the more stock in the mutual fund. Let's say, I give you an example. Let's say there is 100 mutual fund out there, right? In the stock market, there are 100 mutual fund. I bet you maybe 80 mutual fund have Apple in it and Microsoft. Maybe 10 mutual fund have Tesla. You understand the importance? So the higher rating, the more chance that the stock go into the mutual fund. What does that do? The stock gonna go high very fast. Because every time Boeing 401k put in mutual fund that have Tesla go up. Because every paycheck, the Boeing employee put 10% to 401k, right? And that 10%, maybe some of them go to mutual fund, and that mutual fund have Tesla. That means they're buying Tesla. The Tesla continue to go up. So it's very important that you understand that you look at the stock when you buy, it have to be above the red line. And you can do Google Moody rating. Let's say you wanna see Lucid, you can Google Lucid Moody rating. It will tell you how much. I bet you Lucid down here. Okay, so this chart is to tell you that the higher score, the better when you pick a stock. So guarantee you like Apple and Microsoft, they will never go bankrupt because they're top rank right now. Okay, so again, I have a chart earlier to tell you, right? If you have a goal of 1 million, 2 million, 5 million, whatever, right? In if you are young, you retire in 45, 50, whatever, you have to know you have to pay off car loan, blah blah blah, right? Then by doing this math, you will figure out how much money you need. Then how many shares Tesla you want to buy? How many shares of NVIDIA you want to buy, right? So if you want $1 million, so you buy 600 shares of Tesla, right? So if this is a typo, it should be 400 share. You buy 400 share of Tesla, and it go to 3,000 share by 230, you have 1.2 million, right? So you can sell if you want when you miss a million, but I recommend you to buy VOO and QQQ so that you generate money, because if $1 million and your expense is 6,000 a year, after 14 years you run out of money, right? So you have to reinvest certain amount of money into a stable. You don't want to trade stock anymore, right? You don't want to buy high risk stock. You buy VOO and QQQ so it can generate 10%, 15% a year. So you have money to live on more than 14 years. Okay. So long-term investment, you have to have a strong conviction and you buy and hold. That's it. The formula is very simple: buy and hold. Look at here. From 1942 until today, there are 82 years. The last 82 years, 82% are bull market. Only 18% are bear market. What does it tell you? This chart is fact and data, no BS. This is real data. Bull will beat bear. In the long run, bull will beat bear. What does that mean? Buy and hold, you will win. Even though stock market up, down, up, down, up, down, but it's up more than it down. It's up 82%, down only 82%, down only 18%. So if you buy and hold, you will win. But if you listen to the teacher, oh, sell Tesla, wait until it go down. No, wrong thing to do. That means time the market. If you time the market and you time it wrong, you're gonna lose. So you have to buy. By understanding history data, bull will beat bear. In the long run, bull will beat bear. There will be a bear time, right? There will be a bear market, like COVID, right? But it go back up. Financial crisis 2007, .com 2000, but SP 500 and Dow still go up after that. Okay, you have to understand the chart, so it gives you confidence to buy and hold. Here, if you buy and hold Amazon 5 year, you buy Amazon 5 years ago, and you hold it, your return is 114%, about 2x. I mean, yeah, 2x. So from 2000 to now, you had 114%. Just buy and hold. You don't jump in, jump out. You keep buy and hold. Your return is, you still make money. Okay. Google, same thing, 100%, 110%. Microsoft, the last 5 years, 220%. Apple, 163%. Tesla, 5x. If you buy Tesla and you buy Tesla 5 years ago and you hold until today, you get 5x. Look at NVIDIA. You buy NVIDIA 5 years ago, you hold, you have 18x. But a lot of Vietnamese group sell, buy, sell, buy, sell, buy. They lose. They miss a bull run, they lose. You buy in whole 5 years, you got 18%. You beat any teacher. If you buy and hold and you got 18, I don't think any Vietnamese teacher or even American teacher or even CNBC pro analyst, you beat them all by just buy and hold. Very important, that concept. If you don't understand it, a lot of students go in chat room, oh, sư phụ Tú, should I sell that? Oh, should I? No. Buy, keep buying, keep buying, keep buying. The compound interest work for you. And 5 years later, you're going to be happy. Don't listen to anybody. Right now, a lot of people still go listen to a lot of teacher, Vietnamese teacher, and they fool you, they scam you or something. They make you scared. But the historic data prove that those guys are wrong. You buy and hold, you will win. Sometimes we scared. Yeah, I'm scared too. That like dropped to $180. I'm scared too. But I will tell you, I've been telling you guys, Don't do it. Don't touch it. Just hold it. Guess what? Tesla go back up. And many people listen to a Vietnamese teacher. They sold Tesla at $100 a share. They'll be sorry for now, right? TSM 5 year 250%. None of the stock except Boeing. So I have a chart Boeing. Boeing, even though you hold 5 years ago, you lost about 45%. Why? Because COVID, because airplane crash. But I strongly believe Boeing gonna go back up. You're losing money right now. If you hold 5 years, you're losing money, right? But it go back up. It will go back up. So you need to select big cap and you buy a whole, right? So the power stock split. So if you buy 100 shares of Tesla 5 years ago at $50 a share, right? So 100 share, $50, that's 5,000. You put in 5,000 5 years ago, and you buy 100 shares of Tesla. It's split 1 to 5. You have 500 shares. It's split 1 to 3. Right now, you have 1,500 shares. With the current price, you have $500,000. If you buy Tesla 5 years ago with $5,000, you have $500,000 today just by buy and hold. But if you jump out, jump in like me, I make a mistake too. I jump in, jump out, right? You don't have 500 million, $500,000. Again, this is very important because all my calculation doesn't include split. If you include split, you're gonna become millionaire very fast because the number of share. Okay. So if Tesla want to split 1 to 3 again, they need to have 9.6 billion share. So they're going to ask for 6.4 billion share more. So when you see the news that Elon said he's going to ask SEC for 6.4 billion share, right away you know that Tesla want to split 1 to 3. So based on the number of share requests, you can make a guess that Tesla will split how many times. You know what I mean? So pay attention in the future. If Tesla asks for 6 billion share, that means they want to split 1 to 3. Okay, it may happen. Um, okay, the chart from the beginning, you make $1 million by compound interest. That Tesla have 35% return every year, right? That's the one way to become a millionaire. This is second way. The second way is Elon, and I trust Elon. Everything he say, he will do it. Just a matter of time, right? He made me promise Cybertruck in 2023, but until 2024. So he about 1 year late, but he do it. He never promised something that he never done it. He promised something, he will do it. Just a matter of time, even though it's late, but he will do it, right? So what I meant is I trusted him, right? So he said on CNBC and he put out a tweet too that he want Tesla market cap surpass Apple and Remco combined. That's his goal. Elon goal is to have Tesla market cap more than Apple and Remco combined. What does that mean? Right now, Apple market cap is $3 trillion and Remco about $6 trillion. So these two companies add together is $10 trillion. Right now, Tesla only about $1 trillion. So what does that mean? In order for Elon to meet the goal, Tesla have to be 10x. Right? Market cap has to be 10x to surpass this guy. What does that mean? That means Tesla right now is 350. It's going to be 3,500 a share. Just by if Elon can do this. Understand what I'm saying? So this is second way to become millionaire here. And I trust Elon will do it. He will make Tesla market cap surpass Apple and Remco combined. Okay? So I explained already value stock and gold stock, right? This is all day trade, so I don't want to talk about much. Okay, here's an example case study, right? So robo taxi, I will go real fast. These are all the technology of robo taxi, which is a lot of technical stuff. I don't want to talk about it. So here, the three types of robo taxi. Okay, one, the robo taxi belong to Tesla. Two, belong to the owner. Meaning like Tâm Hằng, Jackie, right? They have Tesla car. They can use their Tesla car as a robo taxi later on if they wanted to, right? Let's say Tâm Hằng work from 7 o'clock in the morning, go home at 4. So after 4 o'clock, your car gonna sit in the garage doing nothing. So you can register when robo taxi available, right? You can register your car as robo taxi from 4 o'clock to 6 o'clock a.m. the next day because you don't use it, right? You're wasting just sitting in a garage, right? So you can register. I want my car become a robo taxi from 4 p.m. to 6 o'clock in the morning. Then, if your neighbor call a robo taxi, go to airport, your car will take that person to the airport, maybe charge them $60 or whatever, right? And if you make $60, you have to divide it. You have to share with Tesla, right? Maybe 60-40, I don't know. Maybe you got $40 and you give Tesla $20, right? So you have revenue and Tesla have revenue. The third type is Uber, Avis. They're gonna buy robo taxi and they're gonna use it for their own revenue, right? So there are three types. So these three become a network, robo taxi network. Okay. So here's a chart by a YouTuber. He understand. I think he had a PhD in physics, but he's a Tesla bull, so he created the chart. It's not me, okay? This is from him. So he calculated. So in average, you will make $50,000. You mean Tâm Hằng and Jackie want to do robo taxi, right? So your car gonna make $50,000 in 5 years. So you divide it 5 years. So every year you make about 10,000. And you take 10,000, you divide by 12 months. So every month you probably make $833. And you divide by 30 days. So every day you can make $27 by let your Tesla as a robo taxi, just like Uber, right? So instead of driving, you don't drive. The robo taxi, when the robo taxi is complete and you register and you can make about $30, make it even, right? $30 a day. That means $830 a month. What does this do? What's the importance of this? It's very important because a student, right? They mom and dad or they borrow a loan, $40,000. I don't know. Robo taxi maybe $30,000, right? So they borrow $30,000 to buy a Tesla car, and they go to school, right? But they have to make payment. They have to loan maybe 25 grand every month. They have to pay like $600 a month car payment, right? And they go to school. After school, they use their Tesla as a robo taxi. They can make $800 a month. They use this money to pay their car loan. What does that do? When what I mean is when the robo taxi complete, a lot of people are gonna buy Tesla car because they now their car making money, just not just sitting in a garage, right? Assuming the robo taxi complete, right? So everybody can use your car as the Uber, and you make $800 a month. And I'm talking about $30. If you're lucky, you have a lot of trip, you may make $100 a day. But I'm taking a worst case here, only $30 a day. You have enough money to make car payment. So basically, you have a Tesla car for free. Who doesn't want to buy Tesla? That's going to generate a lot of buyer interest. So a lot of people are going to buy Tesla, right? So the revenue is going to increase. If Tesla only, they have 40 million vehicle by 2030, right? And let's say it costs $30 a mile, and they have 40 million car, and the green line is it 30 cents, right? I don't take the bull case, I take the bear case, right? So the bear case, 30 cents. This guy here calculate generate $480 billion revenue for Tesla. Tesla car, Tesla, the car that belongs to Tesla, right? It can generate $80 billion if they have 40 million EV. Now they may have less, right? We assume, right? Right now, Tesla have roughly about, I think, 8 million car already. They have 8 million Tesla cars running on the street right now as we speak. So in 6 years, it may be 40 million. Okay. Now, so if Tesla have 40 million car and they make 40 billion, by calculation, DCF model that this guy did, the market cap of Tesla is going to be $10 trillion, which is 10x from here. This is only Tesla, not the owner, not Tâm Hành Tesla. This is Tesla only. Make the Tesla 10x from here. Okay. If Tesla plus Tâm Hành car and Jackie car, right, it's going to be like $33 trillion market cap, according to his DCF model. And he's taking a bear case here. I'm not taking the bull case up here, just a bear case. See, 30, 23, and 30 trillion. That means Tesla can be 20x from here if the robotaxi successful. So if Tesla right now is 3,500 at 350 and 20x, that's 7,000 a share. If this happen, okay, of course, there's a lot of assumption here, right? But I'm saying if it happen. And now robot, right? So a lot of like Walmart, Boeing, people can get sick, taking vacation, making mistake, work only 8 hours a day. But when you have a robot, it never make mistake. It doesn't call in sick, right? It works 24 hours a day. So I think Walmart gonna buy a lot of robot, Boeing buy robot, Amazon buy robot. A lot of people gonna buy Tesla robot when it complete. Which I think Elon said 2 years from now they're gonna start produce robot, right? So in average, right? So in average, the cost to make the robot, according to him, he calculated, because this guy used to work for Tesla too, so he know all the number. The cost making a robot is about $8,000 a robot. But when they sell 30,000 a piece, they make a lot of money. Okay. So according to Sean Basser, right? So these are the prediction from bear case to bull case, right? That how much revenue generate for Tesla. So based on his uh, analysis, and there's another one named Chris Camilo. The two of them do this DCF model, right? So according to CERN, the robot gonna generate 7.1 trillion market cap, additional to robotaxi. And this guy said 10 trillion, right? But according to CERN, it's $7.1 trillion to the market cap of Tesla. Okay. So for my DCF model, the way I figure out is a little bit different than the other guy, right? So this year, last year, right, 1.8 million car, assuming if Tesla grow 20%, which is the bear case, the base case, they grow 30%, and the bull case is 40%. So if you take 1.8 trillion, 1.8 million car, and it grows 20%, so next year going to be 2.1. If you take 2.1 multiplied by 20%, going to 2.5, so on and so forth. So what I meant by this chart is if you assume Tesla have 20% goal, by 2030, they're going to make 6 million cars a year, right? That's the bear case. The bull case, right now, Tesla have 4 gigafactory. They may open another 2 or 3 by 6 years from now, 2030. They may have 8 gigafactory or 6 gigafactory, right? If that's the case, they can grow 40%. If that's the case, then by 2030, they produce 16 million cars a year. That's the assumption. Right or wrong, who knows? But I just assume if with this rate, they're gonna have 16 million. Okay, follow me so far. So I also assume that every car Tesla sell about 40 grand. Of course, the Cybercab is 30,000 a car, right? But Cybertruck more expensive. Model Y, semi truck, Model S. So average out about $40,000 a car. Right now, outstanding share is 3 billion share, right? So by 2030, you want 1 million, right? You want $1 million. So how many shares do you have to buy today to have 1 million? That's the reason to do DCF model, right? So today price is about 250, PE 170 right now. The forward PE, the bear case is 80, the base case is 65, and the bull case, I assume that 2030 Tesla are doing very good, so their PE go really go down, right? Go down to 40, right? So the bear case, they produce 6 million car, and you take 6 million car multiply by 40 grand, you have 240 billion revenue, right? If you take bear case, which they produce 10 million car, you multiply that, you have $400 billion. The bull case, it's 16 million car, you multiply by that, you have $640 billion. So these are the revenue generated by selling the car. Everything else, like battery, charging fee, sell insurance, blah blah, selling solar, like Tesla not only do EV, they do a lot of stuff, right? So let's assume these guys only 10% revenue. So you take that, multiply by 10%, that's 24. This is 40, this is 64. Robo taxi revenue is about 120% more than this is very conservative number, very conservative. So remember, it generate a lot, 480 billion, right? 480 billion revenue for robo taxi. So, but I'm just take 20%, right? So 120% of 240 is 288, 480 and something. You add them all together, the total revenue by 2030, the bear case Tesla generate $552 billion. Bear case 920, and the bull case $1 trillion, $1.4 trillion, right? Assuming the profit margin I showed you earlier, the profit margin is 14%, but maybe they're getting better. The robo taxi cost less, the Cybertruck cost less, the profit margin increased to 16%, bokeh 18%. Then you take that, multiply, you come out revenue profit margin is 72 billion, 147 billion, and 260 billion, right? Because minus cost, expense, salary for Elon, bonus, employee, whatever, right? By formula, the earning per share I showed you earlier, the earning per share equal the income divided by outstanding share. So you take 72 billion, you divide by 3 billion share, so you're gonna come out EPS $26. Here you come out $49. Bokeh you come out $88. The stock price, by definition, you take the EPS, you multiply by PE. So for the bear case, 2030, Tesla going to be $2,000 share. Bear case, 3,200. Bull case, 4,000 a share. So we don't know if it's bear, bear or bull, right? So you take all those three, you divide by out, you average these three case, you come out about $3,000 a share. If all my assumptions are correct. Now, the assumption may be not correct, right? But I'm taking very conservative number. I think I'm correct at least 85%. I think my number accuracy about 85% because I'm very conservative, right? And all the number I take is very small. So what does that mean? If you want $1 million, in the bear case, you have to hold right now 480 shares, which cost you about 170,000. If it happened bear case, all you need is 313 shares, and it costs you 100 with today money 110 grand to buy 313 shares. And if it go to $3,185 a share, you're gonna have $1 million. In the bull case, if bull case happen, all you need is 252 share. And if you go to 4,000 a share, you have $1 million. And right now, it costs you 89,000 to buy 252 shares. So you average out about 348, right? If the average K, the Tesla is going to be $3,000 a share, you need 348 shares to have $1 million. This is the reason why I tell all my students, you need to hold at least 400 shares to have a chance to have $1 million. If Tesla go to $3,000 a share. Follow me? Anybody have a question so far? And this is very conservative. I'm very confident about 85% this gonna happen. Tesla will be $3,000 a share by 2030. Based on the revenue, based on the robotaxi revenue, based on how many cars they're gonna sell a year, right? They have, I assume Tesla gonna have at least by 2030 have at least 6 gigafactory, maybe 8. But I'm conservative. I take about 6. That means they have to open 2 more gigafactory from now until 2030, right? They can easily, the base case very easy. Bull case, I don't know. But the base case very easy happen, which is about 3,000 a share. Okay? So this is analysis by Cathy Wood team. This is ARK Investment. ARK Investment estimate robo-taxi could generate $34 trillion by 2030. 34 trillion. If her analysis is correct, I'll take 5% market share because this is 34 trillion for the whole world, including Vimo, including BYD, everybody in the whole world doing robo-taxi 2030, right? Everybody. It's 34 trillion. So if Tesla can get only 5% of market share, that is about $1.7 trillion. And what did I use? I use only 40. Even the bull case, I only use 640 billion. If I use this 1.7 trillion, what do you think the stock price is? You know what I mean? So, and I'm assuming only 5% market share. I guarantee you, Tesla gonna take at least 20%, right? Their robo-taxi gonna take at least 20% of market share. But I'm very conservative. I only take 5%. And Tesla gonna get 1.7 trillion revenue a year. This is incredible. If Cathy Wood is correct, Tesla gonna be $8,000 share. If I use, you know what I mean? If I use this 1.7 trillion plug into my DCF model, you're gonna come out $8,000 share. If her analysis is correct, which we don't know is correct or not, but I have a high confidence. Maybe she have a margin error of 20%, right? Maybe she incorrect 20%. So 80% about how much? About $20 trillion. Even though she's 20% wrong. You know what I mean? This number still be huge. This means Tesla going to be $8,000 share. So the question is, Tesla 350, you want to buy it? Yeah. Tesla go to 550, buy it? Yes. Tesla go to $600, buy it? Yes. No hesitation. Because it's going to be $8,000 share, don't make any difference. If you buy 350, 400, because the compound interest, and the market cap going up so fast that when you by the time it go to 8,000, it doesn't make any difference unless every time you buy in 1,000 share. Yes, then you have to wait for the good price, right? But if you buy every month 5 share, 10 share, 50 share, doesn't matter. Don't listen to the all the teacher scare you. So I hope you understand the compound interest and the way you invest in 401k exactly the same way. You just buy if you have money, you work overtime, you have a bonus this year, your boss give you $10,000, buy Tesla. Doesn't matter what price at that time. Maybe this December you have a $10,000 bonus and Tesla $1,000 share. Who cares? Just buy it. Let the compound interest work, do the job for you. You're gonna become millionaire. But if you listen to all the, I don't know what to call them. I don't know what the word to call them, right? I can't tell them are stupid. They're not stupid, right? They are bậc thầy, right? They are teacher. Maybe they don't know. Maybe they don't know the concept of long-term investment. They keep telling people sell stock. No. When you do long-term investment, you don't sell. You buy and hold. Let the compound interest work for you. Let the Tesla grow, do the job for you. If this everything is true, Tesla gonna be $8,000 share. Why don't you buy today? 350, buy it. We don't buy much, right? We're not rich. Every month we buy 5 share. Or if you day trade, you lucky, you win $2,000 a month. You buy 10 share, 15 share, doesn't matter. Understand? I really want you guys to understand. It does not matter at what price you want to buy. The question is, do you have money to buy it? So you have to do day trade, you have to work overtime, you have bonus, whatever it is. For our group, we day trade, right? Every day. That's why I'm telling you, don't waste your time on TA because you're going to lose money, right? You just need to study TA enough, plus the CE11, right? Make $100 a month. I'm sorry, $100 a day or $200 a day. Every month have 22 days of trading. $200 a day, that means you make 4,000 a month. That 4,000 you buy Tesla. Let the compound interest go for you. But if you learn day trade, you learn TA, you trade a lot of money. Every time you trade 1,000 shares, Tesla go down $5, you lost 5 grand. You don't need it. You don't need that. All you need day trade a couple $100 a day. That's it. You learn enough. You go ahead and learn TA, but learn enough to make $200 a day. That's it. You done your job. You don't need any more than that. Focus, invest in long term. That will make you a millionaire, not day trading. Day trading just for us to make money like a couple $100 a day. Okay? Any question? Make sense? Any questions so far before I continue? Okay, let's continue. I showed this chart before, but I want you to fully comprehend this. You consider the stock market as a system, okay? And within the system, there are many departments, right? Just like Boeing company, they have a sales department, they have a manufacturer department, they have an engineer department, right? So in relative to stock market, you have long term, you have C11, strategy, TA, macro, new trend, all this together as the stock market, right? You have to ask yourself, what are your weaknesses? Do you understand long term? Yes or no? Do you understand CE? Yes or no? Do you have a strategy? Yes or no? Do you understand TA, macro, new, blah, 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 right? So every circle here is a skill that you need to have to be successful. But you have to identify, everybody different, right? You have to identify what are your weakness. right? So let's say you learn TA, right? You're gonna go learn TA. You learn your heart out. You take 1 month class. You pay $5,000 for this teacher, $10,000 for that teacher, right? Now you're gonna become TA expert, okay? So you make this circle strong. What about this? If this circle weak, you pull both sides, it will break. Does not matter how good TA you are, you're gonna fail because you weakness here and here. So you want to be successful, you have to improve the whole thing. Every circle here has to be strong, not just TA. This is a misconception, and I repeat 1,000 times, million times, and nobody want to listen to me. Oh, I want to learn TA. Oh, I want to become recognized Elliott Way, Fibonacci. All BS. You don't need it. You just need enough. What about strategy? Do you have a strategy? Do you have a risk management when you do day trade? Do you understand fundamental analysis when you pick a stock long term? Did you watch my live stream? Did you learn about how I think about a company good or bad? Things like that, blah, 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 right? You have to become strong on every category. Then somebody pull the string, it's not going to break. That means you're going to be successful. If you learn TA and you weakness in the strategy, you weakness in long term, you still going to fail. That's a guarantee. So you have to ask yourself a question: what don't I know? Right? If you think, oh, I don't have a strategy, okay, read a book about it. Watch my live stream. Watch YouTube. Watch CNBC. Whatever it is, whatever it takes to have a strategy here solid. Long term. Do you understand long term? Do you understand PE? Do you understand EPS? Do you know how to do fundamental analysis? Study, make this circle strong. One by one by one, all this circle strong, you will be successful. I'm not saying that I'm against TA. What I'm saying is TA is only one piece, one of the piece to help you successful. It's not everything. You have to understand which more important for your time right now. If you are young, 20 years old, 25 years old, you have plenty of time. But many people in our group are in the 50, in the 60. They don't have much time to fool around with. You don't have much time to fool around with TA. You don't. That's the reality. You need to invest now so that 5 years from now you have financial dependence. So you need to focus on long term. You don't focus on TA right now. If you're a young guy, yes. If you are 20 years old, 25 years old, you have. If you lose $30,000 today, that's okay. You still work 30 more years. But for old people lose $30,000 today, that's a big hurt for them. You have to understand who you are, what your weakness. Don't just listen to all the, I'm sorry, all the BS teacher. Oh, study TA, I'll teach you to make money. That's all BS. You don't need to. You have to know what's important, what's not important, right? So this system here, you have to understand everything. Even though you are good at TA, but you don't know trend, you don't read new, you don't understand Jerome Powell, you don't understand inflation, it's not going to help you. You're going to fail. That's a fact. Nobody teach you this. I think I'm the only guy that point out this fact. You have to understand the whole package in order to be successful. Now, today, did I teach you everything? No, hell no, right? But you have a fundamental, you have a start. So you can read a book about long term, watch YouTube, you learn about more strategy. You can learn it on your own to improve the whole thing so you can be successful. Not just one thing. Okay, that's the point of this chart. So, my advice to you: what to do next? Relative to stock market, think about the stock market as a system. What don't you know? What are your weaknesses, right? And then you need to improve that weakness one by one. Take time, right? Maybe 1 week study TA, 1 week study FA, 1 week study strategy, 1 week watch Warren Buffett YouTube, blah blah blah, right? Then improve one by one. Okay. So in summary, my advice to you, especially young people, start investing long term today. You can start by $500. Doesn't take much, right? You can open an account, Fidelity or whatever, put in $500, and every month you on your paycheck, if you're working, I assume you're working, you put in $100 more or $200 more, right? Maybe divide it out, $100 by Tesla, $100 by NBA every month. If you go up, you make more money, then you put in more money. Okay, let the compound interest work for you. Then in 5 years from now, you're going to be very happy. Don't use credit card too much, because credit card you're going to take even $10,000 at 18% interest. It takes you 7 years to pay it off. You're losing money. But you invest in long term, you're making money. Two different things. Okay, start invest today. If you don't have money, ask your mom and dad. After this live stream, ask your mom and dad, hey mom and dad, give me $1,000. Okay, at the start. So they're gonna open an account for you for the Fidelity, whatever. Put in $1,000 at the start, and then every month you put in a couple $100. The more money you make, you put more. Right now, $100 a month, okay. Okay, continue to learn. Don't stop here. Continue to learn, because the stock market, you never ending learning, right? Read the book, watch YouTube, whatever. Keep learning. If you have any question, I don't know everything, but if you have any question, go ahead, text me, ask me. If I can answer, I will help you. Okay? But don't
And
ever
we would
stop
like
learning.
to hear feedback from you from this
Yeah.
uh, yeah, from this session.
So any
Because
question?
we like to improve more.
Huh?
Nói mấy bé nếu mà có feedback gì á, material is it too heavy for you, too complicated to understand, or too easy? Let us know.
Sure. So if you if you want, again, pay attention to this chart right here. So ask yourself question: which topic you don't understand, right? Then improve it by reading the book, go to YouTube. If nothing works, ask me. I pretty much know everything here. I'm not good, but I know everything here to enough to explain it to you. If you don't understand, if you don't understand about long term, I explain to you. If you don't understand strategy, TA, I'm not a good TA, but I know enough about TA. Okay, so if you don't understand about Bollinger Band or moving average, whatever, ask me a question, I will teach you. Or if if many people ask about TA, I can do a live stream on TA only, or I can do a live stream on macro or live stream on strategy. I can go deep dive on each topic. But the objective, you have to have strong on every circle here. You that's the requirement. You have to understand more. You cannot. A lot of people naive. A lot of Vietnamese beginner naive. They just enter the stock market. They say, oh, I want to learn DA. I'm gonna make money. No, wrong. They end up losing. They burn their account because TA only one piece, not everything. You have to understand the whole thing. Okay. So don't be shy. Ask you if you're shy, you can tell your mom and dad, ask me question for you. Okay. But I want to make sure that you have to improve every circle in order to be successful. I wish I know this 10 years ago, 20 years ago. I wish somebody teach me 20 years ago. Everything today, I wish I knew 20 years ago. If I did, I would never touch day trade. Maybe day trade once in a while for fun. I would have put money on long term. Can you imagine if I put $10,000, only $10,000 on Tesla and NVA 10 years ago? I have $1 million now. But I did not. I picked the wrong way. I picked the day trade way. That's why a lot of people think that I hate day trade. Well, maybe I did because it burned my wallet, right? So don't let day trade fool you. You only day trade a couple $100. If you're lucky, you make $1,000, right? But day trade won't make you a millionaire. Long term will. Day trade just a secondary, just like an income, just like you go to work, right? And you work overtime Saturday, Sunday to make extra money. But your main job is Monday to Friday. Okay, so Monday to Friday is long term. Saturday, Sunday is day trade. Something like that. Okay, so focus on long term and start today. You don't need much. Right now, you can put in $100 and open an account. Ask your mom and dad, give you maybe $1,000, something like that. Maybe $1,000, okay? Then every month you put in $100. Every month put in $100. You'll be surprised how much money you have 5 years from now. But of course, you have to pick a good stock. If you don't trust me, I recommend Boeing, Apple, TSM, Tesla, NVIDIA. If you don't trust me, that's okay too. You can pick your own, like Amazon, Google, Microsoft, whatever you feel comfortable with. But you have to do FA, fundamental analysis. You have to know who CEO is, what company's product, are they good, PE low, blah, blah, blah. Everything I teach you today, you can apply to do FA on that stock. Or you can use the indicator that our group developed. Your mom and dad had it. Just go into your mom and dad account, type in Lucid, click FA, you know right away the company is good or bad, right? But if you trust me, then focus on the 5 total. Every every month, buy $50 each. $50 Apple, $50 Boeing, $50 NBA, $50 every stock, $50. Total 5 stock is $250 every month. Just like you put in 401k. You will be very surprised how much money you have 5 years from now. Okay? Any question?
A palm because you start young. For us, we are about the age of retirement. We don't have much time left. But for you, you have 20, 30 years ahead. So my goal for you is to be a millionaire in 20 years.
Yes.
Can you do that?
No. Not even 20 years. If they start invest today, they can be millionaire 10 years.
In 10 years.
Yes.
Wow.
10 years. If they buy 5 total, they can be millionaire 5 years, 10 years from now. Don't need 20 years. Because Tesla is gonna go artificial intelligence is gonna go very fast. It's gonna go boom in the next few years. NVDA may go to $500. Tesla may go to $3,000. Microsoft maybe $1,000. Every stock you touch today gonna be 5x, at least 5x. Tesla probably 20x, right? When Tesla is special K, right? Every single tech stock that relate to artificial intelligence will be 5x 10 years from now, guarantee. 5 years, I don't know, but 10 years gonna be 5x for sure. Microsoft 5x 10 years, yes. Meta, Amazon, Google, you name it, plenty. But don't touch city company like Lucid and Vivan. Stay away from them. They may go up, maybe not, right? Last week, Nikola EV company filed bankruptcy. They don't make money. They can't survive. Every car, do you know? Every EV that Lucid make, they lost $50,000. Every EV Rivian make, they lost $40,000. They don't make, but they lost. Every car they make, they lost $40,000. Tesla, every car they make 14%. If the car 100,000, they make 14,000. Every car come out of Tesla factory, they make 14%. On the other side, Lucid losing money. Every car they make, they lost 15 grand because they just get started. Now, will they survive? Yes. But they have to show that they make money. If they cannot make money within the next year or so, they're going to go bankrupt. That's the risk of investing in Lucid. So why do you want to take that risk? So you have to do fundamental analysis. You look at the revenue, the PE, the book per share that I spent today, then invest in those company. Don't invest, don't take risk. Maybe if you have $1,000 and you want to buy Lucid, which is okay, maybe 10%. Maybe put $100 on Lucid and $900 on something else, right? So you hope Lucid will be successful, then you have a big return, maybe, but I doubt it. With my knowledge, I'm sorry if I hurt somebody feeling. I think Lucid gonna go bankrupt soon. At the rate they're going right now, if they don't improve, if they improve, then different story, right? That's number one. Number two, if Saudi Arabia, fifth, they call fifth, private investment, right? If they don't put more money invest on Lucid gonna go bankrupt. You can't survive if you make every car you make you lost $15,000. You can't survive that. Just like if you have a pho restaurant, every bowl of pho you serve the customer, you lost $1. How are you gonna survive? Every bowl of pho you sell to customer, you have to make $1, right? You cannot lose $1. That's common sense. But a lot of people naive. They listen to all the bozo on YouTube. Oh, buy Lucid, buy Lucid. You're gonna lose the money, right? You watch the movie by Tom Cruise. What did he say? Show me the money, right? That means Lucid have to show you that they make money before you invest. If they don't show you they make money, then stay away from them. Simple as that. I see a lot of people in Vườn Xanh, right? They put $1 million on Lucid. That's crazy. That's gamble. Okay. Any question? Có ai có câu hỏi gì không? Đây là cơ hội cho mọi người hỏi. Nếu thắc mắc anything, any question at all, I can answer for you. Yeah.
I want to do long-term trade, but if I wanted to get into day trading, how would I learn CE or something like that?
Okay. Hold on a second. So, unlike many teacher, right? When you join the Discord, when you study by them, they charge you a fee like $200 a month or something like that. Our group, everything is free. Everything I teach is free, no charge. But what we're asking is donation. And I have an email here. You can Venmo, Yell, or PayPal to this email address. So the money that we take is to develop the CE, because we have to spend money to buy indicator that three gentlemen, we call them đẹp trai, right? Buy and đẹp trai, right? A handsome guy. They are programmer. They buy indicator too, sometimes $200, $500 on their own pocket. And for me, I subscribe data like 3,000 a year for Bank Jinga, or tech maybe $1,000, thing like that. So all the money donation will go into those, not for profit. Okay. So what we're asking is, if you want a C11, you need to donate to the group to have the group going, right? So we don't force you to do it. You just make a donation. So you want a CE, then contact me. I will show you how to donate and how to get the C11. C11, basically, technical analysis is, in the old days, you have to draw by hand, right? You want to draw support level, resistance level, you have to draw by hand. But when trading view come out, then you use computer to draw. You can pick relative strength index, Bollinger Band, MACD. The trading view will draw for you. What does that mean? That means they computerize it. So if you want a support level, they can draw it for you. You don't have to draw by hand anymore. So, but every indicator, the probability of winning about 55%. So let's say, assume you use RSI, MACD, the win rate maybe 52, 55%, something like that. But if you use RSI with MACD, with Bollinger Band combined, you increase your win rate, right? So it doesn't matter what you do, the win rate maximum usually about 70 to 75%. None of the indicator are going to provide you 100%. What the CE11 do is it combine 35 indicator into one to increase the win rate, right? So the last time we back test CE11, the win rate about 68 to 70%. It depends on the time frame. If you put in a minute time frame, you can have 68%. If you put in a 1 hour time frame, it can go up to 75. But average out about 68%. So, but the key thing is it will draw real time. Every time you turn on C11, it draws support level for you right away. You don't need to draw by hand. So during day trade, you make decision within 5 seconds, right? Buy or sell, right? You cannot go, oh, let me draw a support level. Let me draw a Bollinger. You don't have time for that. So the C11 already draw for you. All you have to do is look at it. You know right where the support level, the smart and money, the Bollinger Band squeeze, whatever, right? You know right away. And then they have 20 heart. Every heart is an indicator. If the heart turn green, that means it's bullish. If the heart turn red, that means it's bearish. And out of the 20 heart, if more green than red, then it's bullish. It tells you right away. So it helps you to make decision buy or sell. Okay, but you have to learn. You go into the record live stream room. I have a lot of clip to teach how to use C11. So you can learn in there, and I have a lot of clip, long term, short term, whatever, right? So let me show you. Right there, record live stream. So if you go in there, there's a lot of clip to learn. For example, here, right there, you want to learn about C, you can click this, download it to your computer. Oh, this one on YouTube. I put on YouTube, so you can click this link, and you learn how to use C11. Okay. Any more question? Okay, so if you go to Yahoo Finance, right? This is Yahoo Finance, and you type in the symbol TSLA. Okay, so you have a Tesla here on the front page. If you go down, you can tell right away market cap. That's like $1.8 trillion, $1.08 trillion. PE, you don't need to calculate. I show you the formula, right? But you don't need to. Yahoo already tell you PE is 166. Earning per share $2. Okay, 52 week high 488, 52 week low 138. Okay, and then on the left hand side, you look at statistic. Okay, you click on statistic, and you see the screen, and you scroll down. 5%, the formula that I show you, it currently is 12. More than 10 is good, right? 5 per book, more than 10 is good. 14, and you scroll, keep going down. Profit margin, oh, it's going down 70%. Operating margin 6%. Revenue $97 billion. Cash, how much cash? Cash they have, wow, $36 billion now. See, look at cash. the total cash at hand, cash flow. Tesla right now they're holding in their hand $36 billion cash. Debt 13. So the money that they own less than the money they have cash, which is good. You want this number bigger than this number, right? You want cash more than that, which is the case here. They have $36 billion cash and only $13 billion debt. Cash flow, book per share have to be more than 17%, which is the number Warren Buffett prefer, more than 17. Tesla have 22. So Warren Buffett, when they look at it, he like it already, right? But that's only one indicator. So outstanding share 3.22 billion, float 2.8, insider 12%, institution 49%. So out of 2.8 billion share, almost half of it, like 1.3 billion, owned by institution, which is good because otherwise institution don't, if they don't like the stock, they don't buy it, right? So this is another indicator that you want to buy Tesla because a lot of big boy, we call big boy, right? We call shark come up, right? JP Morgan, BlackRock, Vanguard, they all own Tesla. Otherwise, if they don't think Tesla is a good company, they won't buy. Okay, so that's how you look at Yahoo Finance. Okay, so or you don't know what Tesla do, you click profile. See profile, click profile. Then you come down here. See Elon Musk is CEO, and you scroll, keep going down. It describe what the company do and the address. So for example, let's do this. Let's take a look at the simple work. Okay, so you wanna day trade this stock. We said, what the hell is it, right? So you go to profile. You look at the address. What is it? China. Right away, you know this is China stock. You see the address right here, and then you look at the description, things like that. So let's say go back to Lucid. Lucid. Okay, so you go to Lucid. You go down. You look at the profile. Peter is the CEO, right? And the address is in California. There's a U.S. company. Description, what do they do? You go to statistic. Look at the profit margin, 0. Operating margin, minus 385%. That means every car they make, they lose money. So you see that? Operating margin, cash. I think the reason cash more than debt, they have 2.4 billion debt, cash 3.4, because Saudi Arabia, I think a few months ago, they just bump in like $5 billion. They put in more $5 billion and lose it. That's why the cash go up. But eventually this cash gonna run out. If they keep have a return, gross profit, negative. So if they keep losing money, the cash gonna run out. Okay.
Là institution tới 74% nha.
With,
Ai
because of Saudi.
Oh.
Because of Saudi. Saudi own the majority of not bank. Yeah, the Saudi. Okay. And then you can go to Google. I like to use Google Finance. So Google Finance, they have a feature that Yahoo don't have. Let me show you. You look at NASDAQ, okay? So scroll down. and I look at maximum. So if you look at Nasdaq, it shows you the straight line here. But the nice thing about Google is you pick and you hold it. You want from here to here how much? So it tells you that it increased 674%. You see the green up here? Look at this area here. See? 700%. So I'm not going to tell you President Biden is better than President Trump. It doesn't matter, right? But what you can find out is President Trump is from 2017, right? He's a president of 2017, somewhere here, yeah, to 2021, right? January to something like that. So during Mr. Trump presidency, Nasdaq go up 149%, right? So from here to here, something like that. So during President Biden, 42%. That's a fact. Whether you like Trump or you like Biden, it doesn't matter. The fact is, during Trump presidency, Nasdaq go up 150%, and during President Biden, it go up 43%. So by data, it favor President Trump. Why? We don't know, right? But that's one way to look at it. Or if you look at, let's say, look at Tesla, NVDA. I like I like you the Google Finance. So NVDA, let's say you buy COVID. What month is COVID? February, right? Or March? Anybody remember? I think March, right? March 2030.
March.
Okay, March. So let's say you buy NVDA March. What the hell? $6? Oh, because they calculate split. So the price $6 means $60 because NVDA is split 1 to 10, right? So if you buy NVDA during COVID, which my sister-in-law did. No, I think she buy later. She didn't buy there. I think she buy somewhere 22. Not early. She didn't make up her mind until 2023. But let's say you buy here. That's crazy. 1,700%. If you buy NVDA 5 years ago during COVID, if you buy $1,000, you had $100,000 now. That's crazy. No, almost 200x, right? That's 200,000. Okay, so about Tesla. So Tesla, you go max, right? 1 day, 5 days, I pick max. So you buy COVID. Oh, this is 2015. 5 year. Sorry, 5 year. For 460%, that means almost 5x. If you buy Tesla during COVID, you hold until today, you got about 5x. But the key thing is you have a lot of share, right? Because during this time, it's split 2 times, 1 to 5, 1 to 3. But in terms of price, in terms of return on investment, you got 5x. Okay, so only Google Finance allow you to do this. Yahoo don't allow you to do this. So you can tell, let's say, where the low side. Okay, let's look at Nasdaq. Somebody asked me a question earlier. So let's do a 1 year, right? So this is a low Nasdaq lowest point right here, right? This is the lowest point. So you click that until today, Nasdaq increased 27%, which is more than 20%. What does that mean? That means we are in the bull market. Remember, I told you that if it dropped more than 20% from the high, that bear market. If it go up from the low point more than 20%, that's a bull market. So we are in the bull market. And if any teacher tell you that we are in the bear market, they are BS. 100% BS. By definition, we are still in the bull market. Okay, what about SP 500? You click SP 500, click 1 year, the low point right here. We're still in the bull market for SP 500 because 21%, more than 20%, right? What about Dow? Low point here. We're not in the bull market for Dow. We okay, but we can't from this 14%, almost 15%, 1496, right? So Dow is not officially bull market, okay? But Nasdaq and SP 500 are bull market. Follow me? So that's how you figure out the market, okay? Don't listen to anybody. Let the data talk. People lie, data don't lie. Okay? Data don't know how to lie. So if you argue with somebody, you know, who better, President Biden or President Trump, doesn't matter. But you let the data talk. You check the data. During 4 years of President Trump, how much Nasdaq go up? During 4 years of Biden, how much it go up? During 4 years of Obama, how much it go up? You know right away by data. Whether you like who, doesn't matter. But the data won't lie. Okay? I only follow the data. I don't favor anybody. I just follow the data. Any question? Any more questions? Yeah, let me say one more thing. One more thing important. It's a chat GPT. Okay? So I think the young kid they know, but people old they don't know, right? So you go to ChatGPT, you Google ChatGPT and register open account. It's free, but you have to have a ID and password. You can ask any question here. Okay? So instead of asking me like Quý Mã, right? Quý Mã hỏi tại sao ông Buffett sell? Maybe they know, I don't know. Why never heard to ask the ChatGPT. Why did Warren Buffett sell SPY and VOO, right? Maybe they know. Quý Mã thấy không? nó trả lời hết cho mình rồi. Thành ra sư phụ muốn học trò đó, you ask ChatGPT trước khi hỏi sư phụ để mình tập cái tánh là mình đi tìm, mình research data, right? You ask anything. What is stock PE? Everything, right? Stock price divided by earning per share. So during your study about stock market, you can use ChatGPT to help you out. Any question at all, you know, what is return on equity? There you go. Return on equity because net income divided by share, just exactly what I showed you today, right? Nothing that I make it up. It's all by definition by Wall Street. Okay. So my point is, if you have any question at all, first go to ChatGPT. You can ask anything, right? And you can type tiếng Việt too. Ai là người tổng thống? Anything hiện tại của Mỹ. It will, nó sẽ trả lời cho mình everything. Ok, hay là cách you be surprised nấu bún bò Huế như thế nào? Very surprised là nó trả lời cho mình hết luôn. So don't be lazy. Sư phụ không thích vậy, right? Sư phụ có thể trả lời, nhưng mà nhiều người cứ hỏi. Why don't you ask ChatGPT? Nó trả lời, không có cái gì mà nó không trả lời được đó. Right there. Mẹo bún bò Huế ngon hơn. Anything you ask, anything you ask ChatGPT nó sẽ trả lời hết. Ok. Thì sư phụ khuyến khích mọi người nên dùng ChatGPT during learning process á, là mình hỏi ChatGPT anything, what's the P, or the book per sale, anything at all. Rồi sau khi bí quá rồi á, thì hãy hỏi đấy. Sau khi mình research, ví dụ như mình không biết, bây giờ mình đang muốn đầu tư vô Lucid, đấy, mình hỏi ai là CEO của Lucid? You'll be surprised, nó trả lời hết trơn. See? Peter Rawlinson hỏi hết luôn. Hay là mình không biết Lucid là gì, right? Công ty Lucid làm sản phẩm gì? Nếu trường hợp mình không biết Lucid làm gì, right? Đấy nè. Hiểu sư phụ nói không? Nó very powerful. You can ask anything. Ai là president của nước Việt Nam? Right there. Lương Cường. So anything you ask, từ stock market, từ bún bò Huế, anything. Okay? Any more question? Sư phụ recommend you guys ChatGPT, okay? Alright, bye bye mọi người, and hopefully cái presentation ngày hôm nay là giúp mọi người được nhiều, right? And all the young investor, sư phụ sẽ record. I record this live stream. Sư phụ sẽ maybe let's see if I can put in YouTube or not, but it's too big. 3 tiếng cái file nó sẽ too big, maybe upload to YouTube không được. Nếu mà YouTube được thì sư phụ I'll post on YouTube. If not, I'll post on record live stream, and you can rewatch it. Okay.
Thank you, Simple.
All right. Okay. Bye, everybody.